Alright guys, so welcome to this video, and well guys, this video is really important because it is really the basis for your mindset to be changed. Okay, so I want you to think about weekly time frame trading, something like that. Okay, so you have your trading account. Okay, you know why you're trading, you know that you see the benefit, like that 15 minutes per week trading is like your the main value, your main priority. You have other things in your life, and like 15-20 minutes per week, maybe 30 minutes per week is like really your maximum time you are willing to spend for trading. Okay, so for that reason you have to develop a mindset which is supporting this kind of a trading, okay, so that you will not feel discouraged or demotivated or anyhow. And we will talk about this in many videos, and so this topic will repeat by itself a little bit, but excuse me. But here are some of the important things you have to consider and change inside of you, like internally. Like you have to change the approach, how you look at charts. You have to change the approach when you're entering trade, when you're managing. You have to change your whole approach, your whole attitude towards weekly time frame trading. Okay, because in fact, look, you will have to wait. You will have to wait for weeks for price to do its own thing. Okay, and one of the things which is the most important, we're getting into the meat right now, is that you do not get stuck into the whether this is the right trade, this is not the right trade. Okay, whether what I'm trying to say is try not to overthink the entry process. Okay, we have lots of time. Okay, but if you, for example, if you have like structure, a nice context and candle pattern, simply enter the setup. Okay, simply enter the setup and enter it with a mindset and attitude of curiosity. Curiosity, you should write it down. I'm entering trades because of my curiosity. I'm interested. I'm playful. I'm curious, interested, and playful. Okay, you have to be playful. Okay, do not try to, this is a very common thing, do not try to it's funny, I was doing that a lot, and many traders are doing that. Like, it's really, when you say paralysis analysis, okay, they're trying to, with their mind, they're trying to figure out what the outcome will be before even entering. So they spent like 5, 10, 15 minutes thinking how this setup will work out. And the truth is, we can't know. Nobody knows. Even the big banks and all these big players do not know. Okay, so what I impose and emphasize is that you more focus on the current price action. So what is current price action messaging you, telling you, communicating to you? Are there enough reasons for sell, or there's enough reasons for buy, or there's no reason to do anything? Just these three things. Okay, and usually one can be eliminated very rapidly. If we have a bearish setup, potentially we can completely eliminate the bullishness right away. Okay, and you can talk about the percentages. We will talk about it in the future videos, but I hope you understand what I'm talking about here right now, guys. Okay, so do not try to overthink the result of the setup. Okay, but because on a weekly time frame, there's a tendency to do that because it's a huge commitment. Okay, if you're entering a trade, you might be in that trade for a week, for a month, okay, for even half a year. Okay, and there's a tendency to overthink the outcome. Okay, while you really cannot predict. If we could just go on a weekly time frame, and we can see a bearish candle, some impulse, like some retracement, rejecting 36, some bearish candle, not the perfect one. But if you would enter here, sell stop there, and stop loss above here, and if you would simply trade it, set and forget, you would make like huge profits. Okay, but if price would, when price would be right here, okay, I mean, not many people would say, I hope price will fall to down there, like pretty smoothly. Okay, so we don't know. Okay, so our job is not to overanalyze and to overthink. I mean, of course we have to analyze, but not overthink the result, because we can't know. Our job is to simply find a high quality setups so that there's enough for bear signal. There has to be multiple reasons, okay, to sell, and for buying signal, it has to be multiple and enough reasons, okay, enough reasons to buy, okay, and that's it. This is our job. This is our job. And when you look at trading like that, it becomes much simpler, okay? And this is when detachment comes into place, because when you're entering out of playfulness, curiosity, interest, okay, you simply enter that, okay? You simply enter that without worrying. Look, you can say, at one point of time when I was starting trading, I remember I said every trader, this is not like if I look back, this was not the best thing to say, but I convinced myself that this trade, for example, this trade is most likely to be a loser. Okay, it will hit my stop loss. Okay, and then I told to myself, this doesn't mean that I'm a bad trader. This simply means that this trade did not work out. Okay, so by the default, you have to understand that losing is natural. Okay, and when you say this trade is most likely going to be a loser, okay, because it's always 50-50. Okay, the way we're trading on a weekly time frame, it's always 50-50. Okay, and most likely it's going to be a loser, and most likely it's going to be a winner. Okay, so there's most likely something will happen. Okay, and for sure, price will hit stop loss or take profit in this case. Okay, so there's no reason to worry about so much. But to not to worry so much, we have to have so low risk that we are not bothered. Okay, if for example, if you're risking like 5% on every setup which you're not sure about, of course you're gonna check it each day 5 times a day, even if you're trading weekly time frame. Okay, but if you're trading with a risk amount which is somehow not so, like, even if you lose like 0.5% or 1%, if you're not bothered with that, that's it. Okay, you have a bullets, you have a chances. Okay, so this is why having a proper risk is important. And about risk management and risk per trade we'll talk about more. Okay, but what I want you to utilize in this video is, or to think about in this week, is that you really stop blaming yourself for losing trades. It's not your fault. Okay, you are responsible for your losses, but you're not a bad person for that. This is a very important, this is probably the most fundamental thing traders are experiencing on a subtle levels, on a very deep levels. People and traders and people in general are blaming themselves. When they lose, they blame themselves. They think they're bad. They're connecting the loss to their self-esteem, to their worth. Okay, even if you lose like 10, 15 trades in a row, you're still worthy. You're still a valuable piece of being, of life, your essence of life. You're still worth it, even if you're not a successful trader. And once I've gone through that, guys, okay, I stopped blaming, stopped worrying. Okay, even if I'm gonna lose, like even if I lose, even if I'm not profitable in this year, for example, I'm still valuable. I'm still worth it. Okay, I still have people in my life who love me. I still have the income. Okay, because if you're trading weekly time frame, you're most likely having a job or having a business. Okay, so this is why I recommend trading as a part-time. Okay, because if you're trading full-time, your word, actual word, I mean, not word is infinite and it's infinitely valuable, but the contribution, if you're losing, if for example, if you end up a year as in a loss as a full-time trader, okay, your contribution is not as desired. So you cannot contribute to the family as much as you want unless you have lots of savings. Okay? So this is when you're a part-time trader, you put that pressure out of yourself. Okay? So look, you have a family, you have a job, maybe you like it, maybe you're not, okay? But try to find something which you really like and trade with stress-free in the trading. Do not put pressure on yourself in trading. You have everything in life you need. Many people in the world are hungry, are starving, are freezing, have lost all their family. They're like, okay. Probably if you're watching this video, you have much more than like 90% of other people. Okay? Okay? So I would like to think about that in this week, and this is a pretty big topic for you to think about. It might take you a week or two or even more, okay? Try to really be thoughtful, write it down, okay? And try to realize, okay, that losing trade is not connected to your value, it's not connected to your worth, it's not connected to your respect, okay? Even if you lose 10, 15 trades, even if you blow an account, you deserve respect, you deserve love, and you're very, very valuable, okay? These things are not connected, okay? So once you will really understand it, and do not think respect from others, being valued by others, but for yourself, okay? For example, once I felt good when I lost, I felt really good, okay? I realized my true power, my true respect and true value is within me. It's not in the trades, okay? Trades and the performance is not the result or indication of my value and respect. This is what traders misunderstood. A lot of them, most of them. Okay? Of course, if traders end up a year in a loss, okay, he's infinitely valuable and respected and worth all the love, but simply these trades didn't work out. So it simply didn't work out. So there has to be something. You have to change something. Okay? And vice versa, if you end up a year in a profit, okay, you're still infinitely valuable, respectful. You deserve all the love. Okay? By yourself, inside of you. But also, that means you did something right. Okay? It's a very tangible, it's very profound thing you have to think about. Okay, so once you really understand that, you simply enter a trade out of curiosity. Okay, so I'm gonna risk 1% on this trade and we'll see what will happen. And when you are so detached, when you really know your value, you're not looking at the value and the respect inside of trading performance and money you make out of it, okay, then your performance will start to improve. It will start improving. Because you will not worry. If you lose like 4 or 5 trades in a row, that's it. Okay, it simply didn't work out. Okay, I'll do my best. I'll see what I did wrong and I'll fix it. So it's much easier. You can see when I'm talking, it's much easier, it's much smoother. So what if you lose 3, 4, 5 trades in a row? Okay? Of course, we can say and talk about like that if we're trading in a proper manner. That means we invest money only we can afford. Okay, if we spend all our savings and put it into a trading account, it is hard to talk like that, of course, because there's much more pressure. So, or for example, if you're unemployed and if you're trading and you need to make performance, it is hard to say like that and talk like that. Okay, so if you want to be a really successful trader, you firstly have to arrange your life and prepare all the ingredients for you to be successful. That means you need to have some regular income, okay, and you need to have some savings, okay. And for example, if you have like 50,000 savings, okay, That doesn't mean you spent like 50 or 40,000 you invested into your trading account. Not at all. You start with 5. Okay? Do not go all in. Do not spend all the savings for the trading, because you'll be under tremendous amount of pressure. Okay, let's say you have 50,000 savings and you start with, like, you've traded demo for half a year, 1 month, 1 year. Okay, then you start with like $3,000, $4,000, $5,000 account. Good. Okay, you're somehow consistently profitable. You started out. Okay, good. This could be like $1,000. It can be, depends on, okay, you get my point. And then, even if you're gonna, let's say, invest 5,000 to your first trading account, okay, you have 45 savings left, okay. If you're gonna risk 5 to 10% per trade, you're gonna be the same in the area, in the red zone. You will not be relaxed while trading. You will not be able to execute a trade out of playfulness, curiosity, and interest, because your risk will be too high. Okay, so you have to reduce the risk. You have to reduce it to the amount, the percentage, or the money amount you are ready to play with. Okay, so like you go in a casino, you have to play with the amounts you can be playful. You can be playful and not worry so much. Okay, this is when you win the most. Okay, so this is the topic for this week, guys, and it's really important that you really think about it, because it's a true foundation for each trader to understand, so that you do not compare the losing trade with your self-value. These two things are simply not connected. Okay, they're completely disconnected. They're completely disconnected. Once you understand that, and once you prepare your trading account in the right amount, with the right risk per trade, with the right type of a community, then you're ready to rock and roll. Even if it is hard for the first few months, half a year, it doesn't matter. You are in a position where you can manifest the goodness, you can make good performance. Okay, so that's it, guys, in this video. I hope you enjoyed. Do some homework, open a notebook, take a pen and write something down more about this. Okay, so that's it, guys, and see you in the next video. Alright, guys, so in this video we will connect the topic to the previous video. Okay, so I have a question for you. So when you started trading, and I remember myself, when I started trading, or when you started trading, think about, was there a period at the beginning of your trading career where you simply were making results? Like for 1 month, 2, 3 months, for some strange reason, you simply, everything what you did, like, it worked out. Okay? Think about it. Have you ever experienced where something simply worked out without any plan or any specialty? Like you were simply, in what kind of a state? You were testing out. You were curious. You were playful. You trade, of course, you probably started with a demo, yes, but it worked out. Okay? The reason for that, guys, is because you were, again, what we were talking about in the previous video, we were talking, you were in a state of a playfulness, in a state of a curiosity, in a state of a detachment. You were not identifying yourself with trading. You were not identifying yourself with the result. But because after so many trades, we get, we start, you know, when people say the beginner's luck, okay? And why in all the fields, many people are very successful at first and then fall. The reason for that is, once again, this playfulness, this curiosity, this like vitality, inner happiness, and desire to learn, to grow, to improve over the money, over the result. Okay, so the process is much more fun than the outcome. But afterwards, because we realize, oh, how much money this could be if I would be trading with that account or that or that or that, so many questions, okay? The rational mind, like the thought process, gets into the place. This is when we get attached to the result, more to the process. And this is when the curiosity, the playfulness, this okay, let's see what will happen with this trade. We simply destroy this kind of a thinking with the attachment to the result, with the attachment and the desire to make profit. Okay? And when we are when we wish and desire to make money and to our take profit to be hit, we begin to being afraid and get afraid and discouraged when our stop loss is hit. So you can see this is a different perspective. See, when we are so attached into winning, we simply get afraid of losing. But winning and losing, it's part of life, not just trading, part of life. Do you know any field, in your job, in your business, when you were just winning? Not at all. There's always daily challenges which test you, that they put you down, they test your inner strength, inner peace, however, okay? But you can see the over attachment. I'm repeating over and over again in different manners. We get blinded by desire to get profit with trading, okay? And because of that, like subtle negative desire, which at the outside and the outward it looks like very beautiful, we simply get afraid to losing. And when we get afraid to losing, we cannot be playful, we cannot be curious and like joyful. So we start to execute trades out of wrong reason. We start to overthink, we start to micromanage, we start to over process all the things, over analyze. This is why I stopped doing major back testing. Of course, testing, yes, but like major back testing, all the journal, it was micromanaging. Of course, it is important to some degree, but overdoing I put myself in a over-analyzing state, which leads to being afraid, fear. Okay? So the open-mindedness, the peacefulness, the playfulness, I really like the word playfulness and curiosity. And let's see what will happen. This is my mantra. Let's see what will happen. Okay? I'm willing to risk, let's say, 1%. There's enough odds and indications, for example, that this trade is going to go to the upside, and let's see what will happen. These three things. Okay? Enough reasons to enter. Okay? Proper risk, so I'm willing to enter, and let's see what will happen. The curiosity and playfulness. Okay? But if there's not enough odds, the first step, and if there is too big risk, okay, let's say that the average is very average, and I'm still gonna buy it, and I'm gonna buy it with 5% risk, I cannot enter it with playfulness. I cannot say, okay, let's see what will happen. This would be naive. This would be like I cannot say stupid, but this would be uncontrolled emotional decision. This will be run by greed. You see, I would say, okay, I want 5%. If this is 1 to 2 risk reward, this is 10%. Good. And it's a very small candle, but there's not, okay, let's see what will happen. I can make 10%. Powerful. Okay? But the chances are that this trade will hit that. Of course, it's 50-50, but I didn't in this case prepare the environment for me to success, to be profitable. Okay? So you have to think before entering, can I just test it out, just see, okay, let's see what will happen. Can you say, let's see what will happen with this trade with ease, without fear? Because in fact, many times, and be observe yourself, okay? When you get an entry, a good entry, and you say, okay, 1%, can you say, okay, let's see what will happen, okay? And observe the feelings when you say that, okay? Let's see what will happen, okay? And then increase to 10% for exactly the same trade, and then say, let's see what will happen. You'll feel heaviness within your body. You'll feel heaviness within your stomach, probably, or a little bit higher, okay? So try it out. Try to use your intuitive feelings and insights for you to be playful when entering. If you're really afraid of entering, reduce the risk. If you're not sure, look, reduce risk to 0.2%. And then you'll say, let's see what will happen with this trade. Okay? And then there's another thing. If you enter a trade with small risk, and if you feel fear of not making enough profit, like saying, okay, but if I would enter with 1% instead of 0.2%, I would make much more. This is greed. This is greed. This is the level number 3 level, okay, where you will be challenged. Okay? And then when you say, okay, I could make much more with 1% instead of 2%, 0.2% risk. Okay, let me see if this setup is really so average. And then you will try to rationalize, okay, this is much better, this is much stronger resistance, let's go 1%. And then your trade hits a loss. Okay, we're going very deep. Do not try to rationalize entries. Do not try to rationalize the price action for the sake of more profit so that you'll risk more. Do not be focused on take profit percentages. Okay? Do not be deluded. Okay? Do not be attracted to the profits of the take profit. Do not calculate the take profit. Calculate the risk reward. Of course, you'll know how much money is there, but do not look at the money of the take profit. Your goal is to be, okay, let's see what will happen. So you feel ease. You will feel ease in your heart, and you will feel the ease and lightness within your abdominal area, or a little bit higher, or even higher. But you have to feel lightness. You shouldn't feel any pressure. You have to be playful and curious. You have to manage and prepare your trading to such a manner that you will be playful and curious. Super important. Super important. Your risk per trade will increase once you will feel enough of lightness and enough of, let's see what will happen. It will happen as a natural process. Very, very important. Try to watch, guys, this video like 2-3 times because it's really, really, really important. Okay, so that's it, guys, and try to make some notes. Okay, try to make some notes. We were talking about pretty lot of stuff. Most of these things are simply flowing through me. Okay, and I'm very happy and very glad to share these kind of things with you because these are really the foundations of the. If you really want to be successful, these are really the foundations. We are all facing these kind of things, and we all have to go through these kind of things, okay? And the process starts with these kind of videos when you firstly get aware of these things, and then you have to go inward yourself and see how you're behaving. You have to recognize your behavior. And these videos help you. So I'm really glad I have a privilege to share this with you, okay? So that's it, guys, and see you in the next video. Alright, guys, so in this video we will talk about patience. So how to develop patience as a weekly trader. So patience is really a crucial factor, okay? Because it happens many times that there is no setup for weeks, okay? So you have to be okay with that. So how to be okay without executing any kind of a trade for the weeks, okay, or even months, okay? So firstly, you have to understand that our trading style, that means trading weekly time frame, that means trading only once per week for the 15 minutes, is our edge, is our advantage over all other retail traders, okay? And it comes down to over attachment, okay? So we talk a lot about over attachment, but simply the reason why so many traders do not succeed in trading, retail traders, is that they are too much into trading. They think trading is too important. They're very serious about the trading. They treat themselves as a professional traders, okay? So there's too much attachment, and the over attachment leads to impatience, okay? So that over attachment manifests as a overaction. So they are overdoing, okay? But in fact, you have to realize and understand that trading is basically waiting, is basically emotional management. It's risk management. It's much different than executing and trailing. This is just a small portion of your time. Okay, even if you're scalping, if you scalp for 6 hours and you execute like 3 to 4 to 5 trades, let's say in that 6-hour time frame, when you execute the trade and when you trail the stop loss or your take profit is hit, these are seconds, okay? So the thought process and everything behind is waiting. It's not active work. So the fundamental problem why traders are so impatient is that because they think they have to work, because we were raised like that, okay? Because the more you, we have a subconscious belief system, the more you work, the more you'll have. But in trading, it doesn't work like that. So you have to detach yourself from this mass blind belief, okay? So one of the ways is to listen to meditation on detachment. It is very helpful. But there are other ways, okay? There are other ways. And let's just get through these ways how to become more patient, okay? So the first thing, one of the options is that when you get into a situation, for example, like that there for 3 weeks, there is no setup, okay? So you start worrying and blaming and doubting, okay? But instead of worrying, use this little amount of time you spend for the analysis and there's no setup, then you just simply have to say, okay, maybe there'll be next week any kind of opportunity. But you have to be grateful for that you have spent just 15 minutes or 20 minutes per week for that. So instead of worrying, try to go into a gratitude, into an opportunity, how much time you have for other things. And this is the second option, or the solution, is that you remember and remind yourself how much time in the past you were spending for trading, watching YouTube videos, following the forums, talking with friends, etc. Lots of stuff. Okay? But still you were not making profits. Okay? So you have to increase your perspective if you want to be patient. Okay? So instead of worrying, there's no trades, once again there's no trade, try focus on what you love. Try focus on different aspects. Do not treat trading too seriously. Okay? One of the biggest problem is that traders want to quit their job, which they don't like, and become a full-time trader. Okay? It doesn't work like that. Okay? Do what you love, find what you love, spend the time with people you really care about. If you want more active money, find other stuff, do business, help people, do what you're passionate about, what you're good at, share with people, and make money. Okay, and then when you will get this money, invest it, these savings, invest it into a trading account and multiply that. This is the purpose of trading. Okay. Another thing is that you remind yourself and understand why you have joined to Weekly Trader Program. There's a reason why you have joined. Is that time? Is that freedom? Is that simplicity? Is that you want to focus on other things? Okay, so why have you joined? What's the main quality which for what you've joined it? Okay, the reason why you've joined it. And remind that yourself constantly about that. Write it down. Try to make a sheet, one A4 paper, so how to be more patient, or why I've joined, or what Weekly Timeframe is bringing me. What's the benefit of Weekly Timeframe? You have to ask yourself. Okay, so we're simply flipping the question. So what is Weekly Timeframe giving me? Okay, in 1 year period compared to my previous way of trading. Okay, in terms of my time, in terms of my energy, my emotional state, okay, my family state, how my previous way of trading is compared to the current weekly time frame trading way of trading. Okay, and then you compare different areas of your life. Okay, so you have to understand why you're trading weekly time frame. You have to go into that thought process. You have to understand it. And once you will really define it and understand it and feel it and live it and write it down, you will not doubt it or question it anymore. Okay? Whenever there is no setup, I'm actually grateful because look, I've spent like 5-10 minutes, there's no setup. Great, let's move on. Let's do what I love. Okay, I love trading. It's true, but it is a way of making money. It's not like an extreme passion. Like the passion, what I'm doing is this, sharing with you how you can save lots of time, lots of money, lots of emotional stamina, and focus on what you love. This is why I am doing and sharing Weekly Trader style, so that you can focus on things which are really important for your growth, really important for your family. Okay, so the reason for that is, and this is a little bit out of the context, but it's painful to watch traders trying to break through the trading so hard that they are sacrificing their relationship, they're sacrificing their time, they become very isolated. And by weekly time frame trading, this is the solution. Okay, you are not so much into trading. Why? Because you are not in front of the charts each day. Even if you're trading daily time frame, and even if you say, and be honest with me, when you were trading daily time frame, have you really checked the charts only once per day? Or if yes, probably not, but if yes, for how long? For how long? If you have spent more than 30 minutes, it was too much. Okay? And probably there was 1 hour, 1.5 hours, and then one video, one blog, a little bit of course. And in doing each day that, okay? And then by the end of the year, if I ask a trader, okay, great, you're trading 4 hourly, 1 hour time frame. So how much profit have you made? In terms of percentages, I'm not interested about your account, not at all. Just tell me the percentages. Yeah, I'm just trying out, okay? So why would you spend like each day constantly for 2, 3, 4, 5 years, 7 years? People are not figuring out after 7 years. And they do not think about moving into a higher time frames, into more investing way of style, type of trading. Okay? Okay, you firstly have to learn how to walk, then to run. Okay? So, really what's important is that you enhance your perspective, okay? And that instead of worrying about you simply focus on what you love. Okay, try to make a program in your mind or write it somewhere down. Whenever I doubt, I simply focus to my family, what I love. Or for every worry about there's no trade, I do one good work, work, yes, or say a good word to my, like, I love you, I care for you, to my family, or do something nice, okay? And you will do an alchemy through that, okay? So another thing is gratefulness, as we said, okay? Another thing is over attachment, so we have to detach, okay? Detach, okay? So here's more about over attachment. So impatience comes from over attachment. This, you can write it down. Impatience comes because of over attachment. Okay, so we can be attached to many things in trading. The first one is over attachment to money, to profit. We want that money badly. So the result is we're entering emotionally against the rules because we're over attached to the end result. We're not leaving enough space for that. Okay, so the second thing is we could be over attached to the position. So a lot of traders who start trading, they are attached, oh yeah, I'm a trader. So this is a title. So if I am a trader, I have to trade. If I do not trade for 2-3 weeks, then I'll lose that title. Okay. This is one of the aspects. And what I would recommend you is that, as we said, impatience comes because of over attachment to what? Okay, you have to think about what you are over attached, what you're emotionally attached so much that it influences you. Okay, many times, because we were, as I already said, as we were reasoned to, the more you work, the more you earn. Okay, maybe you're over attached to that belief. Maybe this belief is so strong within you that it is preventing you to be really patient. Okay, for that I can help you. We can erase this kind of a negative thought forms, negative belief systems out of your energetic system, which will result in an improvement. Okay, but you have to think about what you're over attached. Okay, what you're over attached, and these three are mostly very common. Another thing is that you force yourself, or basically you're forcing yourself to make profits because others expect from you that you make something in your life. Okay, so you are over attached. Basically the belief system behind is I have to produce results in order to be loved. Okay, so this is why many traders are over trading, are not patient, because they have to produce results. Because when they produce results, they are cherished, they are appreciated. Otherwise, they're not. So it's a conditional love. It's not unconditional, which we all should deserve, and we deserve. Okay, so try to go deeper. Try to go deeper what you're over attached. Okay. So another thing is, and guys, try to make notes, okay? Try to go slowly through that. I know I'm talking fast and it's all over the place, but it's very important. Another thing is that trading, that you realize, not just understand, but realize deeply within you that trading is not doing. Trading is waiting. Okay? Do not focus on charts. It's not about charts. Charts are just a tool for you to make money. Just a system to make money. Okay? But the core is the subtle thing, the invisible you, which is basically the I am, the soul. Okay? So this is why we focus so much attention and pay so much attention to the inner development. Okay? To spiritual development, understanding the fundamentals, the energies behind, the belief system behind, everything which is behind and invisible. In fact, it's not behind, it's right there in front of us, but it's invisible, it's not touchable. Okay? So I want you to understand that trading, actual trading, even the charts you're looking, and doing the orders, these are not touchable things. You cannot touch the MT4 account or this PowerPoint. You cannot touch this. So the core, if you want to change the outer result, the outer end result, physically, which is money, you have to change the inner condition firstly. You have to understand it, you have to study it, you have to pay attention to it. But the answers are within you. If you're not profitable for the 4 or 5 years, the problem is not in strategy. The problem or the challenge is not in strategy or the broker or all of that. If you improve that, yes, there might be a change and an improvement, yes, but the core is within you. So one of the aspects is that you realize that trading is not actual doing, it's not work, it's not like moving object from A to B. It's the mental, it's very intellectual and even emotional work. So you have to maintain and balance your emotions, your mind, your thoughts, however you want to call it. Okay? But too many people are focusing on technicals. They're focusing, the technicals are as called as a physical side of the trading. But the invisible side of the trading is the core. Okay? I know many of you have heard that many times, but this is a little bit different perspective to do that, to think about, to talk about that, okay? So the last thing I want to talk about is how to be more patient is, and you can write it down, is to increase your willpower. It is to increase your willpower. Alright guys, so in this video we will talk about how to increase your patience by increasing your willpower. Okay, so here's the energetic perspective. So as you know, I'm working with here in Slovenia and also globally more and more with people. I actually help them become more prosperous and abundant by talking, explaining and doing consulting and therapies on energetic aspect of the prosperity and abundance. Okay, so it's not purely psychology and mindset, but it's energetic field. It's an energetic subject, if we can oversimplify that. Okay, but when it comes to impatience, energetically looking, there is some trigger which caused that impatience. Okay, this can be a belief system, this can be a desire. Okay, mostly impatience comes from a desire. So for example, when you're smoking, okay, if the willpower of a smoker would be so strong, all the smokers know that every single smoker knows that it's not good to smoke, but they still do it. And if the smoker would have so strong willpower that he would simply say, I will not smoke anymore from this moment right now, he would stop. And I've met many people who, by just increasing their willpower and understanding why they were smoking, just increasing their willpower, they've gone through that. Okay? But why smokers cannot stop smoking is because the desire is too strong. And the desire is, how to say, the root of the desires is inside of the emotional body. Okay, so we have a physical, we have the more physical and the more subtle bodies. And the first subtle body is the etheric body. The second one is the emotional body. And the third one is the mental body. Okay, so when the person experiences impatience and doing, for example, some emotional trading mistake, or trading behavior which is not so good, that means the emotional body has control over that person, and that mental body, which is the body for willpower and the processing of information, is not so active. Okay, I hope we're on the same page. So you know, people whose main goal in life is to enjoy, that means sex, drugs, alcohol, leisure, playing games, having fun, partying, just all that stuff, just non-stop pleasure. This is the constant, the ultimate goal. These are the people whose emotional body or emotional aura, however, are very dominating, are dominating their behavior, their speech, their actions, their thought processes. Okay? And it is very hard to be very productive and very disciplined if this emotional body is in control, is dominating, especially if there are unhealthy beliefs, unhealthy thought forms and emotions inside of emotional body. Okay? So the solution, why I'm explaining that it's important. The solution for that is to increase the willpower, to increase the strength of the mental body, the mental aura. Okay? So from the energetic point of view, the mental aura is connected to Ajna chakra, which is in the middle of your eyebrows, at the center. Okay? And some other chakras anyway, but the Ajna is very, very important. It's a commanding chakra. Okay? While the emotional aspect, the emotional body is influenced by the solar plexus chakra and the heart chakra. But the solar plexus are for the lower emotions like stress, anger, and all these negative thought forms. And the reason why so many people are working through the emotions is because this chakra is the mostly affected by this lower. It's like a clearinghouse. It's like a airport. Okay, it's like an airport for this kind of vibrations, lower vibrations, if I can say it so. Okay, it's hard to explain in a very extremely simple manner. Okay, so for example, when you feel stressed, you feel this the irritation or discomfort in your stomach. You feel like a butterflies or any discomfort in your stomach. Okay, or when you're stressed, when the trade is going to get to be a loser, you're feeling this discomfort, and it's most likely inside of the stomach area or a little bit higher. Okay, so this is the solar plexus chakra, but there are ways, there are techniques where you can reduce that. It's a stress management techniques, but by increasing the willpower, which is basically paying attention and holding the unwavering focus between your eyebrows, by this you increase your willpower, you increase your mental capacity, you increase your mental strength, mental stamina. And when you form an intention, consciously or subconsciously, however, that your emotional body is under complete influence and control by mental body, so meaning that your mental body is controlling your desires, your emotions. Okay? This is how you become much more patient and disciplined. Okay? From my own practice, for example, when you go for example, if you're arguing with a partner, you're under a lot of emotional drama. Okay, so the emotional body is getting very triggered. It's expelling a lot of negative thought forms and emotions. But if you ask me then, okay, so Maran, would you go right now meditate for 1 hour and a half? I would say hell no, of course not. I need to rest. Okay, but when I'm in periods, because we all have ups and downs, when in a periods when I'm really in the center between my eyes, between my eyebrows, and inside of head, so when you're really focused, you can basically sense and feel, and it's practice. Please, I'm just explaining my experience. When you're really peaceful inside of your head, there's no thoughts fluffing around. When you're really focused, and whenever any kind of an argue comes, and when you're holding focus on the center between your eyebrows, and it can be, you can go inside, you can go outside the body, try to experiment. Just hold the point, just imagine the point between your eyebrows for like 3 minutes, 5 minutes, 10 minutes, however, don't overdo it, okay? But you will see your willpower will increase, and whenever you'll be in a stressful situation, you will not react so much if you'll do it regularly on a daily basis for a few minutes, okay, or in the morning, okay, because the mental body will take control over the emotional body. So the mind is really like a sharp knife. So you decide, I'll do that right now, and you do it. This is the willpower, okay? But if you're full of an emotional, if your dominating body is emotional, you will just be, for example, you'll say, oh, this is meant to be, or it happens as it is, okay, or this is my destiny, etc. You're living you're giving your life to hands of others. Everything is consequence. Everything is the life gets very fluffy, and yet you do not get things done by this kind of approach. The reason why I'm talking about that to you is because I was in this state for quite a long time, in this emotion, like everything comes from by chance. Of course, I mean there are universal laws which direct these kind of things, but our willpower is respected. We all have our own choice. Okay? And if we want to become more patient in trading, we have to do something about it. The patience will not come out of nowhere, or we have to do something. We have to clear a certain belief. We have to understand it. We have to intellectually understand things. Okay, so the intuition and the intellect, the thought process, have to be matched. Have to align. Okay, this is where you get enormous amounts of results. Okay, and when your willpower is increased, when you say, okay, I would really like to enter this trade because I just something I just wanted, but if I go through the steps, okay, this is not good, this is not good, okay, this is somehow good, this is not good, this is not, it's actually not a good idea. It's actually not a high quality setup, so I'm not going to enter it. Okay, but only by having your willpower so strong, you can do that. So it's not the technique, it's not the method, it's your decisiveness, it's your trust within you. And you can trust to yourself only if you are somehow willful. If you decide, look, I'm strong and I'm bold. I know it, I know how to do it. And even if I don't know, I don't know. And I'm confident in that. Okay? So it's the willpower actually have a control over the emotions. This is the key to a trade, to become patient trader in anything in life. This is not applied just to weekly time frame trading. This is applied to anything in life, guys. This is why I love to record this course, because it's much more than just trading. Okay, so I'm very excited. Okay, so that's it, guys. Try to practice each day. Practice like 2-3 minutes, 5 minutes, 10, 15, 20, however, increase slowly each day. Just focus on your eyebrows. It's like you close your eyes and like you would just look with both of your eyes at the middle and just hold the focus on one point. You have to become one-pointed. The minds of people are flattering around all over the place. You have to become sharper. Okay, this is the key to patience and to discipline. This is what traders are lacking, and this is a very powerful and very simple technique. Okay, why? Because it uses an energy center which is created by the creator for the willpower. And the Ajna chakra is or center is also the center which holds the stress out of your mental and emotional body. Okay, you should write it down. Okay, so that's it. Practice, guys, and let me know what are your results. Unless you'll practice, if you'll not practice, there'll be no results. If you'll practice, there'll be a result. Okay, so that's it, guys, and let's move on to the next video. Alright, guys, welcome to this video. It is very important video because we will talk about the limiting beliefs, attitudes, and negative actually tendencies when it comes to trading weekly time frames. So during my trading career, and especially when I moved to higher and higher time frame, I've noticed that people, the traders around me are having, including me, are having some difficulties, some inner obstacles, which are actually preventing them or us traders to successfully trade the higher time frames. And this comes and has become very noticeable, especially when it comes to trading a weekly time frame. Okay, because you really check charts only once per week, and even if though, it looks like a very good way, and it is a good way, but a very comfortable approach, which is many people are having difficulties trading it. So in this video, we will talk about what are these limiting beliefs, attitudes, and tendencies which are preventing you to really enjoy into the freedom of trading weekly time frame. Okay, so let's just get started. Okay, so the first limiting belief is I don't have enough money, enough big account to trade a weekly time frame. Okay, so many people simply get stopped when it comes to not just weekly time frame but also daily and a 4-hourly time frame. They think that they need minimum $10,000 account. Okay, and let me tell you, this is not the truth. The truth is that you can trade on a very small trading account. It can be as low as 500, 400 euros or dollars, however, but you have to use the right type of the trading account. Okay, so on the markets there are standard accounts and there are also a nano accounts, okay, or cent accounts, okay, like a cent, like a penny, okay. They're called cent account, nano account, and you can Google these kind of brokers which offer a cent account. Okay, so you can request any kind of a broker to offer you a cent account. There are not many of them, but I personally have tested, and I know that Oanda is offering this option. Okay, this is for me the best way to trade is with Oanda, and I'm not affiliated with them anyhow. I've actually asked if I could get some commissions if I refer to them. They said we do not have such deals. But what I like with Oanda and with their FX trade platform is that they allow to trade with as minimum as 1 unit. Okay, 1 unit. So you have to understand why one micro lot, listen carefully, in MT4 is 0.01 lot, is 1 micro lot. Okay, and 1 micro lot is equal to 1,000 units. One micro lot is equal to 1,000 units. Okay, so if your stop loss is 400, 500 pips, and if your account is not big enough, and your minimum position size is 1 micro lot or 1,000 units, your stop loss might be too big. It might be 7% of your account, and you don't want that. Okay, but the FX trade platform from Oanda offer you to enter with as minimum as 1 unit. 1 unit. This is 1,000 times less than 1 micro lot. Okay, this is 1,000 times less than one micro lot. So you trade with micro lot. Okay, you can trade with that. So even if you have like 300 or 400 euros account only, you can still trade with like 600-700 pip stop loss and still have accurate risk per trade, like 1% or 0.5%. Okay, so this is the huge benefit. And also when you'll grow your account, even if you have like $25,000-$30,000 account, and there's a you want like 0.75% risk per trade, okay, it might be still not accurate if you can enter only with 2 lot 0.35. Okay, you might want to have a little bit more accurate, so you might not have a full precision in MT4, but with FX trade you can enter with like 25,472 units. So this is a very, then you check the lot size, I mean the risk per trade, and you see that it is exactly the way you want it. Okay, so in order for you to experience that, I simply recommend you to go on Oanda, open a practice account, download the FX Trade platform. This is their platform. I mean, very, very powerful tool. I mean, at least for me. Sometimes it will take some time for you to get used to it. But when you trade a weekly time frame, look, you don't have to spend much time. You don't need any kind of extra features. And I mostly, like 90% of the time, I execute weekly setups on a phone. Okay, I rarely use the charting platform. I mean, for the analysis, for the public, for you guys, yes, but otherwise for my personal use, I just trade it from the phone. Okay, so the Oanda's FX Trade platform really offer you to have a small account if you're just starting out. If you don't want to like start with a 10, 20, 30,000, okay, no problem. You can start with 1,000, with 500, doesn't matter, and you can still trade weekly time frame, okay, and still have a like 1% risk per trade, okay, for example, or even less. Okay, so this is the solution for this limiting belief. So I don't have enough big account to trade weekly time frame. You have it. You have the tools which can offer you to trade weekly time frame. Okay, the second one is trading weekly time frame is not profitable. Okay, so, and this comes to lack of a perspective. Okay, look, if you are surrounded with people who are mostly scalping and you're scalping, okay, the trading of a weekly time frame is so far away from your perspective that you simply cannot understand how you can enter with a weekly time frame and trade successfully with the weekly time frame. Okay, so you have to understand that scalpers and day traders, they are valuing the profits only. Okay, they really don't care much about their time. Okay, but if you have a job, if you have family, if you have obligations, you should value your time. Your time is very important and valuable. Okay, so you have to design your trading to your lifestyle. Okay, so there's not much hocus pocus to talk about this second point, but many people really do not believe that trading weekly time frame is even an option. Okay, but because you're in that course, in that kind of a group, community, or team, however, you are aware that it is profitable. Okay, so for example, if we just go through the numbers, let's say that in 1 year, in 2020, you will execute 10 weekly setups. Okay, with stop loss, with fixed stop loss of 2% on each of these 10 trades. And your average take profit will be 1-to-2 ratio, so 4% profit. Okay, so if you have 50% win ratio, which is easily achievable, you will lose 5 trades and you will win 5 trades. So 5 losers times minus 2% is minus 10%. 5 winners times 4% profit is 20% plus profit. The return on investment is 10%, okay, net. It's pure profit, 10%. And now you can calculate, whether you're the judge whether this is profitable or not. But the problem is because many traders think they have to make like 40, 50 or double account each month. Okay, you see where I'm going? The problem is that many traders do not see as 10% as a profitable. This is the problem. This is the issue. They think like doubling account each month or like, okay, this is being profitable. While 99% of traders cannot even make like 10% per year. Okay, so it is wrong expectation. Okay, so firstly make 10% and then you will think about 20% or 30 or 50% and then doubling account. Okay, so firstly make like 5% for 2 years in a row, like 5%. Okay, with consistent strategy, with one strategy, not like changing the strategy and then you end up a year with 20% profit and then you say, yes, I'm a profitable trader. No, do it with one strategy. Do not jump from strategy, changing risk management each and every, like each month, and then say I'm profitable trader. No, it doesn't work like that. If your approach is not consistent, your outcome is not consistent and predictable. So what's your goal is to achieve and to produce the consistent result with the consistent way of trading, with consistent type of trading strategy, if you want it. Okay? So even for example, even if your win ratio will be 40% by the end of the 2020, okay? If you make 10 trades, each month 1 trade, and for 2 months there will be no trade, for example. But believe me, there will be more. Okay, it depends how picky you will be. Okay, but if your 40% win ratio, if you'll make 40% win ratio, that means 4 times 4% is 16% profit, and 6 losers times minus 2% is minus 12%. That means return on investment is 4%. 4% for 10 trades, which actually will take you like few hours of your life. I think this is enormous. I think once you will grow your account to like hundreds of thousands, okay, and plus, you'll see like, look, if you have $100,000 account, and if you make 4%, that's $4,000 per year for trading few hours, making 10 trades. What do you want more? Okay? So this is why I encourage you to spend as little time as possible in trading. Do what you love. Find a ways, if the income is your priority, find what you love, do what you love, make an active income, regular income, design in that way, and then reinvest into your trading account. But until then, practice. Okay? Get experience. Okay? So, in order for you to be a break-even, you need to have a 33% win ratio after the 2020. So out of 10 trades, you have to win only 3.3 trades. And once we add up the the quality of the setups of the weekly time frame, the strength of the weekly time frame, where the big banks are placing their positions, this is easily achievable. Okay? Okay? You have to understand that. So, in order for you to get access to the weekly time frame and reap the benefits of weekly time frame, you firstly have to readjust your expectations. What can I produce by the end of the year? So if you go through the numbers like that, like we've just did right now, okay, you will understand that. Okay, do not aim for doubling account like each month. Okay, I do not know any trader, guys. I'm 7 years in trading, and I do not know a trader who would double up their account like each month or do any kind of a enormous profits. There are people who make like 10% per month. Okay, but this is the different way of trading. Okay, I've done it as well, but it requires a daily monitoring. Okay, but we value time and the combination, how much time you spend for the return, for the profits. Okay, so let's move on the third point. And the limiting belief is, in order to be profitable, I have to be an active trader. Okay, so this comes down to our childhood, how we were reasoned. Okay, and one of the beliefs is that in order for you to make money, you have to work. This is why so many people are not open to passive income, because their subconscious belief is so rooted, so strong, that they have to work in order to make money, that this is the only reality they live. Okay? So, look, here at Forex Weekly Traders, firstly, I simply started recording and producing the content for the sake of simply sharing, really like sharing. Like, this was simply the sharing channel. Okay? And then when the response came into it, and the good feedback, the desire to learn more, the courses were the natural path. It was not like me consciously going, it was something natural. Okay? If I can help many people and I can get paid for that, this is wonderful. This is wonderful. Why not? It's nothing wrong with that. It's actually very powerful. For not just for me, also for you, for all of us. We get an exchange of value. Okay? So I encourage everybody to think about ways how you can make what you love, what you're good at, into a passive way of income. It can be a product, okay? It can be physical product, it can be online product, okay? But it has to be a product, okay? Because when you're selling products, okay, you are not spending active time on it, okay? When you're offering service, you're spending your active and your time for it, okay? So you have to think in order of products. So think what you love, think what you're good at, and how you can package that into a product. And usually, if you're good at some service, you can pack it into a program. You can record the videos, you can do any kind of like that, okay, and offer it, okay. So when it comes to trading, if you move to a weekly time frame trading, this actually becomes a passive way of income. So when you're trading a daily time frame in lower time frames, this is pretty much very active because you have to check it each day. It takes daily effort, daily time, okay? But when you switch from a daily to a weekly, there's a big leap into multiple aspects, and especially in the aspect of time. So you basically, by trading weekly time frame, moving from daily to weekly, you're basically becoming from an active trader, dynamic trader, to investors type of trading. You become more of an investor. Okay, very important. Okay, so try to get rid of the limiting belief that in order for you to be profitable trader, you have to trade daily, you have to check charts daily. No. Usually when I speak with traders and I suggest them to check charts less, and when they report back after 2-3 months, there's not slight, but a significant improvement in their performance. But not in performance specifically, but with their inner well-being. They're really feeling better because they're not so much into it. They're not chasing it. Very important. Okay? The fourth limiting belief is desire to be a trader. This comes, it's a very common one. And it comes to our attachment and the desire to prove to ourselves and to others that we're successful at something. Okay? So the bankers and the traders and the investors in the financial field is well respected in today's economy or community or in the world. However, and if you're working with the finances or trading and investing, you're on the top. Okay, because the current situation on the world is mostly the money is dominating aspect of our world currently. Okay, and it's moving to the different aspects, luckily. Okay, but still the people who are in trading, who are in investing, who are into the brokerage, who are in these kind of things in real estate, they have a special respect. Okay, and they have a special respect because of the risk which is involved into this field. And the tendency, and this is why people are craving to become traders and investors and all that, because they're craving respect, they're craving the attention, appreciation. Okay? But I must tell you that this is not a bad. Okay? I've seen many friends, like personal friends, we were starting trading at the same time. I've very soon noticed, okay, to be honest with you, I never had a big problem with this aspect, okay, for some reason. But I see many traders are getting caught up into this trap where the ego and the pride gets so high, they feel so good with the title, I'm a full-time trader, that this destroy them. Okay, so you have to understand why you're trading, really why you're trading. And if you're trading out of the title, this is really, it's not good. Okay, you have to change that, or you still have to stop trading. Okay, so your entry point, your frequency, your energy entry point to trading has to be from the uplifting way. You have to see an opportunity in trading to enhance your life of your family, and life of others. This is the right intention. Okay? If the starting point is from ego point of sight, and I know this might not appeal to you because most like 99% of traders inside of the Forex traders is very mature. You're really like, I mean, don't understand me wrong, but your way of thinking is really above the majority. Okay, because if you've joined to a weekly trader, if you're prepared to execute few setups per year, and you're aware of that, and you're aware of that you'll make like 5, 10, 50% profit, you are like your years of the whole trading market. But I'm just explaining you because at some point you might face that, or you have faced that, or you had, or you will. Okay, so this is very important that you understand, that you look at the trading not from from a title point of view, okay, or however you want to call it, but from as an opportunity, as a growth to expand your life, okay? The fifth one is somehow connected to the fourth one. So I need money right now, okay? The wrong intention. So many traders are trading because they want to increase their profits while their account is not big enough, okay? So you have to understand that if you want to make money in trading, you need money, okay? The bigger your account is, the bigger the profits will be, okay? So if a trader needs money right now, okay, then I highly suggest finding a way, we were talking about that, finding a way where you can get money. If you really need money, like need money for survival, okay, then trading is really not a good option because there's too much risk, there's too much emotions behind. So all your actions will be emotionally biased because you need money, so you have to trade. And this is why so many traders are active traders, are trading 1 minute, 5 minutes because they need money. This is the, gosh, I would seriously restrict trading to to all people who need money. There should be a filter. All people who need money right now, this should be, I mean, there's forbidden to trade in any kind of a markets, okay? Because this is how the financial industry is getting money, okay, by this kind of a greed, okay? And anyway, so the intention, once again, it needs to be from the higher perspective. You need to look at the weekly time frame trading or any kind of a trading style as a opportunity, as a potential to uplift your life. Do not rely purely on trading. There's no need to be a full-time trader. There's no actual benefit. You can be a part-time trader. And once you understand you can be a part-time trader, let's say for trading forwardly, daily, you also understand, oh, okay, I can also trade 15 minutes per week. It will be the same by the end of the year in terms of profit. You simply risk more on a weekly and that's it. Okay, so you really have to enhance your perspective and your intention, why you're trading. And you have to really go deep into that, especially connected to weekly time frame, because there will be no setups like for 2-3 weeks, for example. What will you do? You have to understand why you're trading, okay? Okay, the sixth one is fear of trading weekly time frame. And this is also a little bit like questioning for me, but many people are having fear of trading weekly time frame. Okay, and mostly what from experience I can tell you that there's this particular fear, and this fear is called fear of missing the profits. So this comes to, it's an interesting one. You know, when there's a 1 minute time frame, you get each candle on every single minute, you know. So there's a subconscious program which tells you, okay, every single minute I can make money, okay? But if you're trading weekly time frame, your subconscious say, okay, every single week I can make money. Oh, no. I don't want to make money each single week. I want to make money each single minute or even second. Okay? So this is why traders are subconsciously, from the survival point of view, are starting on a lower time frames. Okay? Because if I would say, okay, start simple with the weekly time frame. No, I'm missing a lot of opportunity. There's many opportunities. Yes, it is true. But there's also many opportunities for you to make a mistake. For you to be exposed to a higher risk. For you to be exposed to a huge slippage. For you to be exposed to a huge news which will gap your stop loss. For huge opportunity to be involved into the manipulative market speculation. Okay? So there's many more opportunities, if we can say so, on a lower time frame. Okay, it is also the 1 minute time frame. I've been there. I've been successful in 1 minute time frame, but it was a very good opportunity for me to get burned out. A very good opportunity, wonderful opportunity. And in fact, I'm very grateful for that opportunity, because I've realized what I don't want. And that I've realized in all these years what wealth really means. Okay? That wealth is really having a multiple areas, multiple fields, multiple projects which generate you profits, which generate you money. And if this is 4% in trading per year, wonderful. I'm happy for that. Let's move on. How can I improve? What can I do next? How can I contribute to the society? Okay? So very important that you understand why so many traders are afraid of weekly time frame. And the question is, are you afraid? Do you feel any fear when it comes to trading weekly time frame? Do you feel any discomfort? Okay? Do you feel any discomfort when it comes to weekly time frame? And go deep into yourself and think about it. What are the feelings? How would you describe a feeling when you talk to a friend, or when you simply imagine like you're trading, it's the end of the 2020, okay? Or the end of the year. You were trading only weekly time frame, okay? How do you feel? Do you feel that lightness? Or do you feel any discomfort? Would you like to trade more? Is still tendency there? Okay, so you have to go through these kind of things and really go even deeper and understand the root. Okay, so I feel some discomfort when it comes to trading weekly time frame. Why? What's that? Well, okay, I feel like I want to trade more. Okay, but why I want to trade more? Okay, why do I want to trade more? Okay, because I really need money right now. Okay, this is why I want to trade. Okay, so maybe trading is not the best for me, or maybe I have to find something else which will produce more predictable way of income, or I feel the discomfort trading weekly time frame because I feel like I'm not a trader then. Oh, so this might be a sign that I like a title of being a trader. So there's an ego behind there's a pride behind which is limiting me, which has nothing to do with actual trading. Okay, so we have to think it in that way. So why you're feeling discomfort when it comes to trading weekly time frame? Okay, and if there is no discomfort, if you simply see the opportunity, the really you value the time. Okay, I'll trade like 1-2 days per year if we sum up all the analysis time per year, and I'll make like 2, 3, 4, 5, 10, 15% profit. Wow, what opportunity! If you see that as a pure opportunity, then that's it. And I'm recording and trying to muffle and shuffle all these words and all this to break through that your limiting beliefs connected to weekly time frame, because it is important. Look, if you do not believe that subconsciously that weekly time frame is beneficial to you, even if you're joined, you will have hard time sticking to it. So you have to do all as much as possible to see simply the light when it comes to trading weekly time frame. Okay, because there will be weeks of no setup, and you'll have to deal with it. Okay, and once you will break through that, okay, you'll see just the lightness. You'll be happy that there's no setup. You'll just move past it, like okay, and now say okay, no setup. You'll say no setup. Okay, great, next, but not next setup or next analysis. Next in your life, your peers, your spouse, your children. Next, this is next. Trading it's like like you go on a gas station, you know, where you fill the tank. Okay, it's just fill the tank and you move on. You do analysis and you move on. There's no like and that and this setup and this. There's no such a thing. Okay, it's a completely new way of trading. Okay, so that's it. The seventh one is I cannot trade because of swap. Okay, so look guys, I will not go much into a swap, but you have to understand the bigger picture once again. Okay, there will be swap, you will face it, but this is a really like minimal fee which you have to pay that you're in a trade. Okay, so there are swap free accounts as well. You can go also even into that if you're concerned and worried about, but many I mean traders feel the benefits of weekly time frame. They feel it, they want it. Okay, but they say, oh, because there's a swap, there's a like weekly fee for trading. Okay, then I mean that's not I don't want to pay to a brokerage to a broker this kind of fees. Okay, because they're minimal. While they are scalping like few pips, they're not aware how much, and there's a slippage and the spread, how much profits they're leaving to a broker. Okay, so it's a lack of a perspective once again. Okay, how much commission is on when you scalp. There's huge commission. I've been calculating like a few years ago, and I just realized, oh my god, what I was doing. I was leaving like 30% profit just to the broker while I was doing it. Okay, trading 1 minute time frame, 5 minute time frame. Okay, so you have to once again value the time. Okay, even if there's no look, you have all the fees. You have if you have a bank account, their fee. They're always the fees. Okay, but if you compare the spread, if you have a 3, 4, 500 pip stop loss and the 500,000 pip stop take profit, the spread of 2 pips is nothing, or 1 pip or 3 pips, it's nothing. So on the long run, you'll see the trading weekly time frame is more economic in all the aspects. Okay, so do not get any of these 7 points preventing you from be successful weekly time frame trader, because this is really bad to freedom. This is really bad to your freedom. Okay, and take the weekly time frame trading just as an opportunity for you and for your family to expand, to grow. It's an opportunity. It's not an obligation. The problem is many traders see trading as an obligation, as a must. I have to trade. No, you haven't. There's no you must. There's nothing like that. You're trading by your own will. Many traders are not aware of that. You're trading by your own will. You want it. You can stop it right now. You can start it right now. You can do whatever you want. It is important what's valuable to you. What's your lifestyle? How you want your life to look like. And once you know how you want your life to look like, you have to design your activities in your day to support your lifestyle, to support your family life. Okay? If you're going to blindly trade like lower time frames, well, you have obligations, you have family, you have a job, for the sake of your health and your relationship, the things will go down. Okay? Or you have to be really, really disciplined. And you have to communicate with your family a lot how you're going to spend each 1 hour per day for trading. Okay? It's a huge commitment. Even if you're doing daily for the 30 minutes, 1 hour, it's a commitment. You know? Because when you trade, when you're trading like lower time frames, you have to do it. It's not like, oh, today I'll do it, tomorrow I'll not. You have to do it. But it's easier to commit like 15 to 30 minutes per week than each day. It's much easier. It's much more manageable. If you project yourself in the next if you project yourself in the next 5 years, what's more likely for you to be committed to? Like checking charts 15, 20, 30 minutes per day and doing the weekly recap and weekly planning and all that by the end of the week? Or you're more likely to check charts on a Sunday or even the Monday morning or even the Tuesday. It doesn't really matter because weekly is not moving so fast, okay? For the 15, 20 minutes, 30 minutes per week, what are you most likely to be very consistent at? Okay? These are important questions, guys. These are life questions. These are not trading questions, life questions. Okay? So these are the questions you have to really think about, okay? We all have to think about. So what I suggest is that you really consciously write down, and these videos really help you. I mean, they're just like giving you all the answers, but take a note, pen and paper, and write down the benefits of weekly time frame you see, okay? And let me know. Send it via email or anyhow, okay? Send me what's your main benefit you see in trading weekly time frame. What's or top 3 things which you really like about trading weekly time frame, or what benefits weekly time frame brings you. Okay, so what I encourage you to do is to become a friend with weekly time frame. It's really your friend. It's or your ally. It's our ally. It's really our ally. It's our best friend in trading. Okay. It's really the opportunity, okay? And the best thing, you know, these 7 points, the problem of these 7 points is over-attachment. I've been talking about this a lot. What is over-attachment? The over-attachment is really your emotional desire and connectedness, or how to say it, with trading is too strong. It's unhealthy. You know, where, for example, where the father is overly protective to his daughter, or mother is overly possessive to his son. This is unhealthy. It's destructive. It's too much love, so it becomes destructive. And this is what over-attachment is. And the more you spend time with it, trading lower time frames, even daily time frame, you're actually consciously attaching to it. So your limiting beliefs, your negative programs, like I need money right now, if this is your root intention, if you're trading daily, and if you do not purify that, this belief will constantly pour into, or will be awakened within your mind or your subconscious energy system, and will result in trading. This is why traders are not succeeding. So this is why I tell to traders, okay, I mean, and also I've done that 2 times. To stop trading for 1 month. Just stop, just stop trading, stop watching, just all about trading, just stop it for 1 month. And you will see a huge relief. You'll come back refreshed. Okay? It is simply because when you stop trading for a certain period of time, not like 1 day, 2 days, but few weeks, month, or even more, you simply detach the old thought forms, the old programs, negative programs, are being stopped, and you can clearly see them. And then you can do something, you can do mental work or energy therapy or anything like that to eliminate them. Okay? But you have to be aware, we have very deep rooted, like these limiting beliefs and attitudes inside of us. Okay, even I have it. Okay, we all have it. Okay, but if we are trading weekly time frame, we are minimizing the time. We're minimizing. We can be easily detached when you trade weekly time frame. This is the biggest benefit. So we can run and execute and manage trades very like detached, very like in a relaxed state. Nothing bothered us so much. So this is why we have to treat weekly time frame as a friend. It's our friend. It's our buddy. Okay. Very important. So really try to see the potential and the benefits in trading weekly time frame. Let me know, guys, what do you think? Because it's really important that you write it down, that you are aware of that, and you live it, and try to take a few days and try to sense and feel the weekly time frame. Try to imagine how does it feel during the week. How do you feel during the week when you did not check charts? How your life improved, how your relationship improved, how your especially inner well-being improved. You're not so anxious anymore or chasing this out. You're very more light. You feel the lightness, the joy within you. You're not worrying, even if there's no setup for the few weeks, or even if you lose. Okay, try to do a projection for the next month, 2 months, or for the whole year. Try to do a projection. How would you feel and how would you behave trading a weekly time frame successfully? It's a very important, okay? And this is also part of the manifestation, so that you will create that good energy roots, okay? So this has been a very deep video, guys. I recommend you watching it 2 or 3 times. Also, take a notes, watch it over and over again, because there's many hidden gems inside of it which can actually answer you to your questions. Okay, so that's it, guys, and let's move on to the next video. Alright, guys, so in this video we will actually just quickly refresh why do we trade weekly time frame. Okay, so look, many of you who have joined to a weekly trader program are having or family, and you have a job or business. You have probably most likely you have kids, you have your own apartment or even a house, and your time is really limited. Okay, but not just about time on a day-to-day basis, but you are also probably in a trading for like 2-3 years or even more, maybe less. Okay, but approximately 2 to 3 years or even more, and you're still not seeing any like major results. Okay, so you're still, when you were trading on a lower time frames, you were not trading consistently for the last half a year and a half. Okay, so for that reason you've joined the weekly trader program. Okay, because you understand the exchange and the value of your time and your goal. Okay, so you've came to the conclusion that if you were not consistent for the last 2, 3, 4 years, that maybe there are smarter ways how you can actually really become profitable while not spending as so much time as you did in the past. Okay, so I'd like to congratulate you for that. This is a very mature and a wise decision. Okay, and this is the first option, but the second option is that you're already profitable. Okay, you are making profits on a lower time frames, but you see that it takes enormous amount of time and especially the emotional commitment and all that stuff. Okay, and you've decided to move to a higher time frame to reduce that. Okay, because if you're trading on a 4-hourly time frame and 1-hourly time frame or even daily time frame for the next 5 years, you'll be very involved into trading. Okay, you'll be very involved into trading. Okay, so you might like that. Okay, you might really like that at first, but after years, and I tell you that from the experience, after years, you simply, because you check charts on a daily basis, you simply get bored of it, okay? And it's like a never-ending battle, okay? I know this might not, I mean, look, many traders will not, real traders will never tell you that, okay? But when you're trading weekly time frame, you're so detached that you are, like, each week you are approaching it as an individual case. It's not like, okay, you have a holidays for the whole year. You'll feel it like that, okay? You will feel it like that. And when you will check charts once per week, you will really, like, be happy about it, okay? You'll feel really uplifted, because you will have an emotional stamina, emotional, like, capital to maneuver with. You'll be refreshed. Even if you have lost, you'll know, okay, I'll spend next 20 minutes and then I'll not worry about it anymore for the rest of the week. So I mean for the whole week. So you're always fresh when you're doing a weekly time frame analysis. Well, if you're doing a daily time frame analysis, even if you're trading just a daily time frame, if you've experienced loss yesterday or 2 losses in a row on a daily time frame, it takes enormous amount of internal resources for you to come next day very refreshed. Okay, it comes from a detachment point of view or over attachment point of view. We're talking a lot about that. Okay, and this is very, very important. So if you are trading, if you've decided for the weekly trader program, either from that you're not profitable yet, or you're already profitable already, okay, you're on a very good path, because from my experience, whenever I consulted or advised or recommended to traders to make less trades, their performance increased. They get better. Okay, they get really better. So for that reason, I would really like to congratulate you once again, because I really have a passion. Truly, I feel like this is my mission from a trading. I'm actually working in a different fields, but from a trading point of view, this is really my mission, because I want to relieve the retail traders out of this day-to-day grind. It's really like never-ending battle, and I'm talking about this from experience and from the experience of the students. It's like, okay, you always, like, you wake up, you think about trading, you're overthinking about trading. Okay, we were all doing that, and unless you get very, very disciplined, okay, it's hard to achieve that. It's hard to achieve that detachment. But if you reduce the screen time, okay, it's much, much, much easier. Okay, so if we move that into a live situation, so the person you spend each day with has a much greater influence than a person who you're spending time 20 minutes per week, once a week. It's logical, right? So you're not so much influenced by this person for 20 minutes, okay, once a week, rather than 1 hour each day. Okay, do you imagine hanging out? Okay, let's say that you have a perfect relationship, but that you would have a friend who would each day for 31 hour, 1 hour and a half or 2, you will have to spend time with it each day for the next, like, many, many years. Okay, you have to build a nice relationship with this kind of a person. Okay, and sometimes this friend, if we can call it like that, will slam you in your face like 2-3 times. This means like 2-3 losing trades in a row on a daily time frame. Okay, so you have to be okay that this friend simply slams you and then you go. Okay, and then you come next time, and sometimes you win, and then okay, so it's much more, the frequency is much higher. Okay, and this is nothing wrong with that. Okay, this is nothing wrong with that. If you're really very well funded, that you're very strong internally, that you simply do not care or anything like that, and you're profitable, good. Okay, but what I'm noticing and seeing is that many traders are still not getting results. Okay, so firstly I thought, look, I mean, because I was making results on 1 hourly and 4 hourly time frame, and even on the lower time frames. For the scalping, I knew that majority of traders will fail. Okay, this is why I didn't go into offering the scalping not resources, but the strategy. Okay, but then I went into a 1 hourly and 4 hourly time frame and succeeded, and this is why I offered 3 combo. Okay, and it's a profitable strategy. It's a very hardcore, like step-by-step raw strategy, price action, one setup, like it works. It really works. Okay, but for some reason traders are having difficulties. Okay, and then we move to a daily time frame, but on a daily time frame there are different scenarios. People are having different issues. Okay, like there's not much setups. Okay, but again, there's still too much over attachment. And now we're on a weekly time frame, guys. But on a weekly time frame, you have no excuses. Okay, you have to check charts only once per week. It's a must. Okay, of course, as long as you're studying, you can check it more, but you have to set a fixed date. Okay, so if you've joined at the beginning of January, okay, for the January, I'll be studying the course and I'll checking the charts, like doing some testing, printing the screenshots, etc. But after the January 30, okay, I'll be just checking once per week. That's it. Okay, and then you let it go. You're not into trading so much. You simply do your weekly analysis and that's it. On the Sunday or Saturday. It doesn't even matter, or even Monday morning, it doesn't matter. Okay, or you can also check and watch the group weekly analysis. Okay, so once again, the reason for weekly time frame is really to pull you out of this day-to-day battle. Very important, because when you're not battling with yourself and with the market, you can actually clearly see what's really going on in the market. Okay, to be honest with you, I didn't expect that I would have to go so far to pull people out of this state, to pull people out of this internal drama on a day-to-day basis. Okay, but from the feedbacks from other people, they see a huge benefit and the opportunity in trading weekly time frame. Okay, so for that reason, once again, I'd like to congratulate you for making that decision. Okay, so that's it, guys, and let's move on the next video. Alright guys, so welcome to this video. We will take a look at another example right here on a pound New Zealand on a weekly time frame. Let me just delete this old stuff for you so you'll not feel confused. So a very powerful setup, like putting a take profits, entering here, putting the take profits, like 400 pip stop loss, 170 pip take profit. So it's really like almost 1 to 4. Yes, actually 1 to 4 risk reward. So risking like 1 or 2% would look guys, very powerful. Look, if you decide for a trading style to really have just a few trades per year, and having a risk per trade of like 2 to 3%. And if you make a trade with a 3%, let's say risk per trade, with a 1 to 3, you make like 9% profit. Are you aware that you can, if you execute this in January or February or March or April, it doesn't matter, and if it takes like 3-4 months, just with one trade you can make 9%. Of course you can lose 3, of course, but the chances on a weekly time frame, if you're really picky, if you choose really high quality, if you're really patient, you look for the good location, good context, good candle pattern, you're really patient, you're not in a hurry, you execute on a high quality setup with a decent risk per trade, with a huge, like in this example, okay? So look, this was end of the February 2012, okay? The take profit 1 to 4 was hit on May. So it was the whole March, April, May, and so 3 months and a half. Risking 3%, this is a 9%. Risking 2%, this is, this is 12%, 1 to 4. 12% profit for 3% risk. For 2% risk, it's 8% profit. For 1% risk, it's 4% profit. For 3 months and a half of no work. Now tell me what kind of a business offers you that. From home, from your phone. Okay? So, and you can say, if you're okay with 12%, this is what I like to do. When I execute a very powerful setup, and I mean when it takes profit and makes a huge profit, then I always take a break of like 3 weeks or even a month, trading on a weekly time frame. You might be surprised, why would you do that? Why would you miss? What if the next month is look, I do not care. I made a good profit. I'm okay. I'm fine for the year. If I make 10-12% profit, I'm fine for the year. So afterwards, when I come back, I reduce the risk, okay? Or I say, look, if I have generated like 50%, 15% during this year, and there's 4 months left, I will make sure that I will not drop below 10% profit. So I want to end the year with 10% profit minimum. So for that reason, I reduce the risk per trade to like 1% per trade. So that gives me 5 trades. Okay? I can lose 5 trades in a row and I'm still hitting my goal. Okay? But of course, if there are 2 winners or 2 winners and 3 losers, still I make profit or break even. But this is what I mean. I hope you understand how you can approach this kind of a trading. You can have one trade with a 3% risk or 2% risk. You make like 6, 7, 8% profit. Okay? And then you reduce the risk. Okay? It might be counterintuitive or not with the math or anything like that. But you simply manage how much profit out of this you want to lose and how much you want to keep. And this, I mean, if you haven't experienced that, it might be strange or not familiar, but it's a feeling of control. If I make 15% by the end of the August or September, there's 3 months left, and I say, look, I'll be picky by the end of the year, till the end of the year, I'll be picky about my trading, I'll pick really high quality setups, I'll reduce the risk a little bit, okay, so that I will not drop below 10% profit. Okay, this gives me a really huge feeling of security and satisfaction. So I'm not at all chasing, not at all. I'm simply staying in an abundant mindset. I allow myself to be like soaking in that abundant mindset. I've created 15% powerful with 2 trades, let's say, or 3 trades, or 4. Powerful. That's it. Okay, you know where when the confidence is made, or when a person is confident, when he's quiet, when he's still, not when he's like being a big. This is ego. This is pride. This is the true confidence is when you say something and then you're quiet and you stand behind it. And here's the same. You execute a powerful setups. Okay, and when you make a profit, that's it. You're satisfied with it. You can be in that feeling of satisfaction for months. You don't have to chase another one. But the problem is because if you made 10%, you want 15. If you want 15, you want 20. Why? For what? What will change? What will this 5% make a change in your life? It will not. Okay? Unless you have a huge capital and you're really looking, you need money for something like renovation of the house or anything like that. Okay, then it will pay off. But anyway, okay, I want you to enjoy the profit. So let's, anyway, this was a little bit different beginning of this video. Let's move on the next example, which is also pretty much the same as this one. So after the price rally here up and hit the powerful area, okay, so when the price is here or even here, we can clearly see that this is a powerful zone. Okay, powerful zone. And price reached that area. Look at that. The first thing it hits and reject it. So this close, so this is open, low, here's open and low, high and close. The close of this bullish candle, this is important, is below the previous candle close and open. This is a good sign. If price would close on this candle above here, above this close and open, this would not be so good. So these are a little like seeds. These are seeds which we use because we know how to read and understand seeds. We can make a powerful prediction. So it went through, but the whole market, the whole world realized, okay, this is a powerful structure, weekly structure. Banks, institutions, big players having millions and billions recognized this structure as powerful. They try to push, but because they understood the power of this structure, they sell here and push price lower. Then the next week price opened and again try to push above, and look at that where it stopped. Look at where this candle stopped. Where's the high? If we go left, look at that. Buy the peep, guys. And this is a predictability. This is predictable. These are the signs here and here. These are all the little signs which amateur traders, retail traders are aware. You know, if this high would be a little bit higher or a little bit lower, this would tell you something. Okay? So afterwards, price reached the peak of this structure and rejected and closed as a bearish candle with a small wick. So there's a power in selling. Okay? The sellers were powerful. And afterwards, price created another strong bearish candle. Still there's some wick in here as well, but the body is dominating. It's powerful. It's more obvious than this one. And also there was a trend line, or at least here was a trend line. Look at that. Boom, boom, boom. Look at that. Boom, boom, boom. On a daily it would be better seen. But we've basically got the breakout of the trend line with the strong candle pattern. So there was a complete change and shift from bulls to bears. Okay, so if we go from these 3 points, the structure was very powerful on weekly. It was respected very well by the peep. The whole context was somehow, I mean, yes, we've got the rejection bearish candle. It is okay. Still, I would like to see more slowing down, okay? the entry candle pattern, this was not an entry candle pattern yet. Okay, so this is more of a breakout way of trading on a weekly time frame. So we wait for a breakout of a strong trend and then enter on a breakout candle. So the entry way of the method of how you can enter this is setting when this candle occurs is, let me just draw it for you. You could put a sell stop below this low, below, okay, not right on it, but below, like that. Stop loss above these swing highs, not just like by 50, but a little bit higher. Or you can enter with a entry. So when you see a candle, you execute it on the Monday or Sunday evening, or even Tuesday. It doesn't matter. Price is not moving so fast. Okay, in most cases. Okay, or you can enter with the retracement way. Okay, so that you wait for but this would not be triggered. Okay, it depends on your how. Okay, so this is the setup. Okay, but now if we take a look at the size of this candle pattern compared to the context and compared to the location, okay, so this is like 450 pips. Okay, so the first structure, the first powerful structure is right here. Okay, is right here. Okay, and you can see price did not reach that. Actually, it missed it for like 70-80 pips. Okay, but you have to understand that the risk reward, there's room. Okay, there's room for price to evolve. Still though, it is pretty big candle if you compare to this one. So, and why? Because it's already quite low. So ideally we would enter in this area, around this area. But this is a breakout way of trading, so the breakout way of trading is always a little bit late. Okay, and we cannot expect like huge risk reward. So normally with the breakout way of trading, I'm not aiming for like an extremely huge take profits. Okay, so this is important, guys. This is important that you understand that. Okay, but for example, if this candle, breakout candle, would be like this one, like a very strong, like that, I would not enter, because the risk reward would be like ruined. It would be like 800 pip for like 800 the first structure. It's not what we want. Okay, it's not what we want. Okay, so these two videos, guys, this one and the previous one, are very important. So try to look for candles which have room to evolve, which are small enough so that you have a take profit of at least 1 to 1.5 minimum, ideally 1 to 2 or more. Okay, like in both these two examples. Okay, so that's it, guys, and let's move on the next video. So everybody who joined to a weekly trader program, once again, we are trading purely on a weekly time frame, and that gives us really a freedom. So one of the things which really look when there's no setup like for 1 or 2, 3 weeks, okay, if I feel for some reason like, oh, there's no trade on a weekly time frame, I immediately transform this. This is basically an expectation. Okay, so we shouldn't expect to from the market that it will produce what we want. This will lead to frustration. Okay, this leads to frustration. If you expect that you will make, let's say, 200 pips in this month, or you make like 2% in this month, if you expect that, and if the expectation is not met, then you'll feel frustrated. And when you feel frustrated, you'll do something not so. We will do something which is not so beneficial to our trading performance, to ourselves. Okay, so what I'm realizing, and not just about in trading, but in general, that expectations, and also a lot in the relationship, you know, when you expect a partner to behave in a certain manner. Okay, for example, that you expect that partner will be caring and listening always. This is a belief, this is an expectation. And you have to understand, expectations come from the beliefs. Expectation is basically a belief. Okay, and this belief is created because of certain insecurity within ourselves. For example, if you expect to make like, and if you want to make like 2% each month, like only 2%, not 2.1 or 1.9%, just 2%. This is your belief. But you have to ask why you are believing like that. Okay? So you are believing like that, and you are wishing and desiring that because of some reason, and you have to ask what's the reason. What's the problem with 2.1 or 1.9? Okay? For example, probably there's some insecurity behind. Okay, for example, I want to feel secure, more secure. I really want to, for example, some people have, like, I want to make just 2%. No more, no less. Or more, for example, like 10%. Anyway. But if we go even deeper, then I was, why just 2%? What's so special about it? I don't know. I just want to feel like secure. Oh, secure. You want to feel a feeling of safety in your life. Okay, so why do you don't have a feeling of safety? What happened in your childhood? Oh, we moved like 5, 6, 7, 8 times in the first 3 years of my life, childhood, and my father was like drinking a lot, and I was not feeling safe. I'm always in a constant living in a fear. So, okay, so these kind of things come up. So you have to look deeper to your wishes. So behind your wish, behind your desire, okay, behind your expectations, there is a reason for them. You have to figure out what's the basis of this desire, what's the basis of this expectation. But once you drop the expectation, okay, so this is very important. But once you drop this expectation, okay, you become much more free. You do not expect, okay, I do not expect that in this week there will be a trade on a weekly time frame. Not at all. Okay, but I can think like that because I have, of course, because I'm long enough in the trading that I understand how markets works. But I have my financial structure and situation condition is well rooted, it's strong, that I do not rely on the next trade. So when you put a pressure of yourself, okay, like, look, if I would have to feed my family with the next trade, of course I would be like terrified and I would go all in, for sure. Or not, probably not, but anyway, you have to put pressure out of yourself. You shouldn't expect. You have to trade. And when we are talking about, it depends where this video will land, but you have to trade based on feelings of curiosity, of happiness, of opportunity. And if there's no setup for 1 to 3 weeks, you have to be grateful that you are so patient. And you say, I am so grateful that I'm very, very patient. I know how and when and why to execute the right type of setups, and I'm patient. Okay? And if you want more tapping on your shoulder, you say, look, like 90-95% of traders really fail in the market. And I am disciplined enough to stay out of the poor quality setups. There's no tendency within me which would lead me to bad trading decisions. So you feel the confidence and the strength within that. These kind of feelings, okay? But in order to do that, you have to have your financial condition in your real life established. Okay? This is why I tell people, if you don't have money, don't trade. Yes, please trade. If you don't have money, please trade, because you are accumulating the knowledge and experience. It's a very good thing to do, okay? But if you don't have money, like you're trading demo account, do not expect like making like few $1,000s per week, okay? You have to be realistic, okay? And I filter this kind of people out even before joining to us, because I really don't want to deal with people who are getting to get rich quick, because it does not exist, okay? You can make money fast, consistently, okay, with the weekly trader time frame, with the daily scalper, also through combo strategy, but it takes time, okay? Okay, so let's just get started. So this was an introduction, and I might post, yes, I'll post this video as it's very narrow, it's very precise video, and I think it deserves a special video. So I will put this video in the weekly trader program as the next video. Okay, so that's it, guys, and see you in the next video. Alright guys, welcome to this video. So the purpose of this video is really to put any kind of a stress connected to actual analysis out of your mind, out of your field. However, because I want you to change your perspective towards weekly time frame trading. Okay, so let me tell you what do I mean by that. Okay, so you know, if you're trading lower, I mean, always when we were trading lower time frame, we said, okay, are you a trend trader, are you a reversal trader, or you're going against the trends, or counter trend trading? But in a trading a weekly time frame, okay, there is no such a thing. Okay, there's no, like, you cannot say, okay, I'll just be trend trading on a weekly time frame. Okay, because if you do that, you will get like just a few setups per year. Okay, so you have to become a flexible. So when we're trading a weekly time frame, we're flexible. We are utilizing all the knowledge. We are taking all the knowledge and making our trading practical. So if there's a range on a weekly time frame, we trade with the range. If there's a trend set up on a weekly, we go with the trend. Okay, if there's some more aggressive counter trend trade, we go on that. Okay, so I call this approach common sense trading. Okay, or you could say also a little bit more like intuitive way of trading. So you will get a feeling what kind of a setups are producing the results. So I know this might be like very strange approach, but from the experience I've noticed is that no single setup is the same from the past in the future. Okay, so every single setup is so unique. Okay, is so unique that whenever you have too strict rules, too strict steps, you are approaching trading and charts and the whole markets with a limitation. Okay, well, there might be a huge opportunity in front of you, but you're not going to enter it because of your rules. Okay, this is a completely different to what everybody is talking on the market right now. All the trading mentors are talking, completely differently. Okay, but you have to ask yourself, are these mentors are actually trading on their live accounts? Okay, can they show at least like half a year, 1 year, year and a half of verified track record? And the answer is sadly, but it probably, this is what I've experienced. I went to most of the trader mentors and I asked, do you have any verified MFX book accounts? Okay, and the answer is like there was always changing the topic, etc., or sending any kind of a PDFs or statements which can be easily faked. Okay, But when you have an MyFXBook account, this is the verified, this is the third-party software. You just simply link the account and that's it, okay? So this is very, very important, okay? Do not think that you need a step-by-step rules in order to be a profitable trader, okay? Try to think a little bit more about that, okay? Even though I mean, what is step by step is this course, is this process how you become profitable. But the actual entry, there's no step by step, no. But people like that, okay? People need that. People need sense of security, okay? But do not take a step by step like, okay, well, of course we have the approach, but there's no like follow point 1, point 2, point 3, point 5. There's always a little bit change. There's always a little bit differentiation or fluctuation. However, okay, so what we are following is the 3 steps which we are talking about all over again: the location, the context, and the current candle pattern. This is really the core of our trading, and at the end, only what matters is whether I'm prepared to risk this so much amount of money for the few weeks, for the next or a couple of months. Am I willing to risk? Am I willing to risk and commit myself to this trade? This is the only question. Okay, this is the only question. If the answer is yes, then the trade is probably good and you're ready to get into that trade. Okay? If for some reason you see a good trade, but you're not willing to, like, I don't know, I don't feel like, okay, ask yourself, is that your own fear? Okay, or is that your or maybe you are trying to risk too much? Okay, so then you ask yourself, okay, if I have this setup, it looks good, but for some reason I'm not willing to enter it. Okay, then I ask you, okay, so for how much risk per trade you want to enter? It's 2%. Okay, great. What about 1%? Would you be willing to enter with 1% and commit for the next few weeks, like 1 month, 2, 3 months? Oh yeah, this could be an option. Okay, so the risk is the problem. Okay, if then I would ask you, okay, so if you would say with 1%, no, still not. But then I would ask you, but it's a good trade, it's a good setup, right? Then you say yes. Okay, then there is a fear behind it. There's a certain thought form or certain belief behind your way of thinking, or however you want to say it. Okay, so try to be an observer. Try to act as an observer when you're approaching to trading. Okay, do not jump into a trade. Okay, try to ask certain questions. Okay, so am I willing to commit myself for the next, let's say, 5 months with this kind of risk to this trade? Okay, are the quality of the setup good enough for the risk I'm willing to take, and am I willing to commit to that? So these are the 3 components which will tell you and help you to make the decision easier. So the purpose of this video was not talk about what I've just talked in the last 30 seconds or the minute, but it's really to give you not the permission, but that you allow yourself to be a little bit more flexible in your trading, that you are not afraid to experiment with any new setup, okay, with any kind of a new trading opportunity. What's really important when you're making a trading decision is that you are looking it from a point of domination of the bulls or the bears. So when you sum up all the 3 elements, so the location, the context, and the current candle pattern, the entry candle pattern, you have to really ask yourself in terms of percentages. Okay, so if I would have to determine what is the ratio between bull power and bear power, okay, I would recommend that it is at least 70% in your favor. So if you're looking for, and let's find one setup, guys, okay? Okay, we're here, okay. Okay. Okay, I just have one random chart here. Maybe let's find. Okay, great. Let's pick this one, okay? Look at this. Look, here's the trend line, okay? So we've got actually two elements. We've got 36 as support, and we've got a trend line. Okay, it's not the best trend line, but it's a valid one. The 36 is really our guide, okay? And here we've got a candles penetrating the 36, and but afterwards we've got a bullish candle creating higher high, but not the higher close, but still it's a bullish one. There's a clear change from bulls to bears, okay? So the location is here, the context here, the candle pattern is here, okay? But the question is, if we have to combine all these indications into the percentages between the bulls and the bears, and it takes time to practice a little bit. Okay, so let's write it down, okay? Bulls. Okay, let me make it a little bit bigger for you guys. Let's put it green. Where's the green? Lime green. Okay, let's put it like 20. Okay, bulls. This is our entry candle. Okay. And the bears. Interestingly, right? We're talking about animals right here. Okay. Let's put it that way because it's a bullish setup. Okay. So when you combine the location, which are the sweet spot, the 36, the trend line, we have two, okay? Then we have a context. Do we have any kind of a slowing down? Actually, not really much, but the sweet spot is quite okay, okay? And then we have a candle pattern, which looks somehow as an entry, okay? Now, if we combine all these three together, okay, we have to ask how much bulls are, okay, because we want to go along, how much bulls are in control compared to the bears. So what's the ratio? Okay, so if I would say 100% bulls here, okay, let me just put that into a black color just to make it a little bit easier. So this really helps me make my trade. I mean, now I do it without it, but it's a really good practice. You actually contextualize or make your hidden, your bias, your way of approaching a little bit more touchable. Okay, so you combine multiple actions, indications together, and you put it into numbers, and you'll see you'll get really good at it. Okay, firstly you might have some trouble, so it will take more time of you, but you'll see it will work out very fast after. You'll say like, okay, 60-40, okay, 65-35, okay, 70-30, okay. And if the 100% would be like, this is the perfect setup, this is all in, bulls are fully in control. Okay, we are talking about control, or better said, domination between bulls and bears. Okay. And in this case, if it would be 100% zero, that means like there's no clue about that bulls are really in control. That doesn't mean that bulls will price will just fly off, but from the current price action, from the whole context, from the whole location, for all the indications, bulls are in charge. Bulls are confident. Okay, we could also say who is more confident in this case. If it would be 100%, that would mean bulls are fully in control and bears are actually afraid of, or the whole market participant are afraid of selling, because there's so much certainty, so much confidence into the bulls. Okay, so it's a different perspective, it's a different approach. We're just changing the words, but it's very beneficial. Okay, you have to try it out. Okay, if you will not try it out, if you will just watch this video, you will not understand the potential and the power of it. You have to put that into practice. So you go back into charts and try to do that. Okay, but in this case, compared to all these indicators, so the trend line, the 36, okay, good. The whole context, not so good. Okay, still a lot of bearish power here. Okay, the entry candle pattern, yeah, it's a bullish one. It's had a higher close, yes, good, but still it's not so much smooth transition as I would like. Okay, what about room? Okay, there's room to up here, yes. It's a good risk reward, like 1 to 2, 1 to 1.5. Okay, so what's the ratio between bulls and bears? So what's the how confident bulls are here? So I would say like 60%. And you'll see after some time we'll get very close to this. And when we'll get very close to this number, so you will say like, okay, you would say like 55-45, okay, or 65-35. So we'll get very close by the end of the year, or very soon, we'll get very close to that. So for that reason, 60%, okay, bulls, great, 40% bears. Am I willing to risk 2% for this, for 60% certainty of the bulls? Okay, for dedicating my time for probably, okay, if this movement lasted for 9 weeks, okay, we can compare, we can say that for the next 9 weeks it will be probably the same, and it was in this case. Okay, 9 weeks, it's like 2 months and a little bit more. Am I willing to risk 2% for this? I'm not quite sure. Okay, what about 1%? Yes, this would be an option. Okay, so the more you have here, if you have like 70 or 80% plus, you'll see you'll make decisions very like pretty easily, especially above 80%. But if you're below 70% of your desired entry direction, you'll see you'll have difficulties entering that. So for that reason, you can simply reduce the risk per trade, okay, or you can change the intention of the trade so that you're saying, I simply the purpose of this is really to reduce the risk, but to simply see and to get myself into the experience of the trading. So just to see, okay, not bothering about the result, just trying out, okay. So you can do that, okay. So I hope, guys, that I am sure that this makes sense. Okay, so we're talking about the confidence of a certain direction. Okay, we actually compare the confidence between bulls and bears. We're actually materializing our thought process, so the structures, the trend lines, the whole location, the sweet spots, with the context, with the current candle pattern, and we're putting it into the numbers. Okay, so this is the approach I've been doing it subconsciously for years. Since ever. I'm doing always, but I was not aware of that. It was so natural to me that people, the traders I'm talking with, are actually missing that. They're missing the tangible directions. Okay, so I have that. Okay, multiple stuff, but how much is that in percentages? Okay, and we're lucky here because we have only two directions. We have bulls or bears, so it's like binary. It's like, okay, if it is 50-50, you have a doji candle and you're in a range on middle November, it's 50-50. You don't want to be in that. You want to be above 70%. So when you go through the charts in the back, in the past, and we will go through the examples, you will see that this will really help you. Okay, so I encourage you guys to experience with that, go in the past, find all these three elements for the location, that means the sweet spot, the whole context, and the current candle pattern, and the room. Of course, there are multiple aspects, okay? Combine them and put it into the numbers. So you will feel much more like in control. And then when you have a percentages, you have to ask yourself, am I willing to spend like so much percentages, risk per trade, for so much weeks in front of me? If the answer is yes, great, enter. If no, ask yourself, what's the problem? Is the problem the time? Is it too long? Okay, if yes, am I too impatient? Maybe I'm impatient. Okay, what can I do about it? Okay, or it is too huge risk. Maybe it's too huge risk for the percentages. Okay, so try to reduce it. Okay, is maybe the intention of your trade. So you write these things down, guys. Is maybe the intention of each trade? Is the intention of this trade to win? Okay, you have to ask yourself, am I entering this trade to satisfy my emotional hunger? So I'm purely looking for a winner. Okay, if this is the case, change the intention. Change the intention to be an explorer, to be a student, to be curious about the outcome, to see what will happen, not to expect. Because when you expect the win, you are very hard to enter, or you're entering with a huge risk. Okay, so change the intention of the trade if this is the case. Okay, but if you're still, let's say you have like 80% here, and you don't want to risk not 2%, but even 1% or even less, then there's fear behind. Then you have to dig even deeper, and I can help you with that. Why are you afraid of even entering a trade? Okay, what's the root cause behind it? This is very important. Okay, so it is a process. What I'm here explaining you right now is basically the process, how we make ourselves. It's basically a trade entry process. Okay, not by step by step, but in a more how to make your mind into a more tangible and structured way. Okay, I mean, I hope this makes sense, but I'm repeating over and over again just for you guys with hope to understand, but you understand it, you get it. I'm just trying to show you like 5 different angles on a certain aspect, but it's very black and white. It's very, I mean, it's clear what we're doing here. Okay, so go back in the past, find many reasons why this trade would work, why this trade would not work. I mean, the location, the context, and the candle pattern. Put it into the numbers, okay, like 60-40, 70-30, like 30-70, however, and then ask yourself a question, whether I'm willing to risk compared to the confidence of the bulls. Am I prepared to spend like 7, 8, 9, 10 weeks compared to this risk and compared to the certainty and the confidence of that direction? Okay, and then if no, ask why. Okay, what can I do? Okay, reduce the risk. Great. Okay, so this is a very natural process. What I'm doing here is just making you conscious it for you. Okay, when you will master it, you will not go writing 60-40 or asking yourself, you'll just do it. But to master that, to get to that destination, you have to go through this process like for the next couple of months. Okay, and even if you hold it for the rest of your life, it's okay. It's a powerful way of entering a trade. Okay, but what I want you to understand, and this is the theme, the sentence I've started with, is do not get stuck into the rules. This is important. This is important aspect to entry, because we can enter with the trend, against it, in the channel, however, okay, because the no setup is equal to the previous one. It's always dynamic. So entering a trade is a dynamic process. It's always changing. Do not look for you can look for the similarities and for the structure. Yes, powerful. We are doing that. But do not look for like each setup or only one single setup on a weekly time frame. It's not going to work. Okay, on the lower time frames, yes, to some degree, but not on a higher time frame. Okay, so that's it, guys. Try to watch these videos at least a few times. Take notes. I mean, it's really important that you write these steps down. And that's it. And let's move on the next video. Alright guys, so in this video we will talk about a very important questions which we have to ask, I can say always, before we are entering on a weekly time frame. So you have to understand that when you're entering on a weekly time frame, okay, that means your stop loss and your take profit are also set based on a weekly time frame, and that leads to your actually commitment. So when you are entering on a weekly time frame, you have to understand it might take, or for sure it will take weeks, okay, at least 3, 4, 5, 6, 7 weeks for your take profit to be hit. So it is a commitment. Actually, it's an investment. Okay, so I want you to look at entering a trade in terms of a commitment. Okay, more specifically, for the current setup, am I willing to risk, let's say 1%, and am I willing to wait like approximately like 7, 8, 9, or 10 weeks? It depends on your, and you'll get a feeling, okay, how much time certain setup will last. Okay, but it is an important point of view that you understand as a weekly entry setup as a commitment. Okay, it's really an investment. So right now I want to show you 2 examples. Okay, I want to show you 2 examples. Okay, and just lead you through it. Okay, how would you think? What would your thought process be? Okay, so as you know, the first step is that we really identify the major sweet spots. These are the structures, these are the trend lines, the EMAs, etc. So here we have a EMA 200 right here. Okay, and here we have we're on a pound New Zealand from 2011. Okay, so we have 2 powerful setups, one more obvious, one less obvious than another. But if we simply mark the powerful areas, we can clearly see this is the ultimate low right here. It's a zone, okay? Okay, and the next one is right here, okay? So these are, okay, let me fix that for you guys. So these are 2 zones. They're pretty powerful, especially this one, and pretty close together. So this is a good sign. So that actually adds up to the credibility of this structure. So if 2 structures are together somehow very nearby each other, this is a good sign. But if we would have, for example, a little bit lower, this one like that, and another even lower, then this would be a question which one is the most dominant. But if you have 2 of them and they're pretty close together, this is a highly potential area for the turning point. And as you can see, price, this is very important video, guys. So price continued to the downside. Okay, imagine we are right here. We've drawn this structure. We're seeing they're pretty close together, especially the lower one is pretty tight area with like tight zones. Okay, because if the area is very thin, okay, their structure is very thin, that means there's a strong probability for price action to bounce out of it. Okay, so let's say, okay, so price is moving down. There's some signs of the first sign. Okay, here's the first sign. Let's go step by step. This is the first sign. Price rejected the first structure, but break through. But still, there's wicks on the lower side. Then the price action is getting slower. I mean, more consolidating on a lower time frame. And then we've got a candle tapped into that the best structure. Okay, rejecting. And afterwards, we've got a bullish candle, small candles, showing a clear signs of a bullishness. And if you take a look, here's a powerful trend line. Okay, we could go on a lower time frame, but from 2012 we will not get the daily time frame. But there's a consolidation, and you can see these highs, high, high, high. There's a trend line. This candle is a sideways, is a channeling. This is, okay, it looks like that, something like that. Okay, it's a range on a lower time frame. Okay, a range on a lower time frame. Okay, and afterwards we've got a candle pattern breaking this trend line with a higher high, and a higher close. Look at that. This close, here's the close, is higher than this candle and also the trend line. Also, we've got a bullish, the rejection right here, which is showing a sign that sellers try to push lower, but the buyers were so strong that they created higher high and a higher close. So on a lower time frame, this looks like something like that. Breakout through this resistance or even the trend line. If you imagine this trend line broken, okay? So why I'm explaining you about it, I mean, first of all, it is important that you know and you see many setups so that you'll get confident, you'll train your eye. Basically, it's a muscle, okay? But on the other side, what I would like to present you in this video is what we were talking in this video in a theory about commitment, okay? So if we go into a practice, okay, how to make this theory practical is that you have to look, when you're entering, you have to look at the size of your entry candle. Size of your entry candle compared to the context and compared to the whole price action. So you have to, this is our entry candle pattern. This is our entry candle pattern, okay? Once again, why? It reached the powerful support areas. They were slowing down. It was an exhaustion. We've got the signs of a rejections. We've got a nice trend line. We've got a nice break, higher close. That's it. Perfect. So we've got the whole situation, the whole location was good. The whole context was slowing down, and the entry candle pattern is good one. Okay? But what is really important is that you pay attention to the candle pattern, that you compare entry candle pattern. When you see a good candle entry pattern, you compare it to the context, and you compare this candle to the whole price action, especially to the whole price action. So what do you mean by that? So if we understand and know that entering on a weekly time frame is a commitment which will last for weeks, months, or sometimes even half a year to a year or more, okay, we have to make sure, or ideally, is that our 1-to-1 risk-reward ratio is being hit pretty soon, within a few weeks, so that we can trail, that we can, okay, put the emotional stress out of ourselves, okay? So in this context, if you look at this candle pattern, so the entry, the classical entry is putting a buy stop above this candle, okay, stop loss below this candle low, okay, or if you're more aggressive, you can enter with the entry order, so the entry is here, the stop loss here, or if you want a more conservative stop loss, you can put it below there, or even below there. It's really up to you. So with the weekly time frame trading, I do not want to limit you guys, okay? But what I want you to really, encourage you and emphasize it, that you look at the size of the entry candle and compare it to the whole price action. And let me show you what I mean by that. Okay. If this is our entry, if this is our stop loss, the stop loss is, let's say 400 pips, okay? Let's say 400 pips, okay? And compare to the whole movement, which is 2000 pips. This entry is relatively very small. The stop loss in pips is very small compared to the potential of our movement. So this is what we are looking for, okay? This is what does it mean to have a room for the take profit, okay? So you can see the 400 pips, okay? It's hit within, okay, here's the 400, this is the 1-to-1 take profit. These would be hit in a 3 weeks period, 1-to-1, okay? And then we can trail stop loss from here to the most recent low, or even this, okay? Or any way you like, okay? But it's, the risk is reduced for the half, and this is what we want, okay? So this is very important. This is what will give you confidence and satisfaction. Why? Because it's more tangible, it's more touchable, it's a more realistic way of trading. If we would have a very big candle, very bullish candle, indicating the same sign, a lot of bullishness. Let's say that entry would be right here. That entry would be right here. And the stop loss would be like, it would be extremely powerful but huge candle. Okay, like that. Okay. So that would mean like 700 pip stop loss and 700 for the take profit 1-to-1. It would last 1, 2, 3, 4, 5, 6, 7, 8 weeks. Okay, so you get my point. So you want to reach as high risk reward ratio as possible, as fast as possible. Very important. This will give you like a satisfaction and a feeling of. So this is why I encourage you to enter on a small candle patterns. Okay? With a lots of room. Even if we have a big candle, dominating candle, but if it is too big, for example right here, if this would be an entry, okay, this is a huge candle. This is like 1,100 pips. Look, 1,100 pips, it was not even reached, but if it would be reached, it would take like 3 months for that. So do not feel bad if you skip a very huge, like a setup with a very huge candle pattern. Do not feel bad about it. Feel free to miss it or increase the risk. If it is really good setup and the candle is big, you might increase the risk. But be aware of that, because this will be a huge emotional commitment then as well. So what I really encourage weekly traders is to look for a powerful setups, mini setups with a mini candle patterns. I mean mini, like obvious but small or average size candle patterns, because this will offer you and give you a quick risk, a satisfaction, because you'll reach 1-to-1 risk reward or 1-to-2 a little bit faster compared to the big candles. This is in terms of management, of your actual emotional management, what you can actually do to feel better. Okay, so this is really the lesson of the video, guys, to really not look just at the location, the sweet spots, the context, and the current candle pattern, but be aware and compare the current candle entry pattern, entry candle pattern with the whole price action and with the context. The candle should be normal in range or a little bit slightly above the normal, so it's very dominating. Okay, even on a very small candles, if they're obvious, powerful, good, great. Just avoid a very big, huge candles, which will take you like, okay, you don't want to be in trade like for 2-3 years. You don't want that. Okay, we're still trading, we're not investing. So ideally our trades are below half a year. Okay, maximum to 1 year. Okay, sometimes it lasts more. Okay, don't be surprised of that. But if you're in this kind of a trades for too long, the swap might be like emotionally like painful, if I can say in that way. Okay, so do not try to go for a like 3-4 year runner. Okay, it might happen, or you might trail one portion of the trade for like years. Okay, but don't go full in like 3% into the 3. I mean, look, it depends. I'm just telling you from the experience of what's working. Okay, you can say, look, yes, I'll enter on a weekly time frame, I'll reach 5% and I'll have a risk reward of 1 to 10%. So if I just leave that trade, it will make a 50% profit. I mean, yes, this is a very good story, okay? But in fact, we have to get to that. Okay, we have to firstly execute 1-to-1, 1.5, 1-to-2 risk reward. Okay, so we have to build that confidence to that. Okay, it's a very, very important. Okay, So that's it for this video, guys, and in the next video we will move on the another example of just that. Okay. Alright guys, so in this video we'll talk about why it's actually important, I mean not important, but recommended to put an entry order above or below the entry candle pattern. Okay, so I'll show you just a few examples. These are not the ideal examples, but just to give you a clue about it. Okay, so here we have a downtrend movement, and then we have a small consolidation candle, and then we have a higher high and a higher close candle. So this is a good entry to look for. Okay, of course we have a trend line here which was broken with this candle. So this is, I mean, a clear, nice looking weekly candle pattern. Please ignore the structures on anything like that. Okay, just entering here. Okay, this is entry candle pattern. Okay, and we put a buy order above this candle high. Okay, of course the magnet in MT4 is powerful on this, and we put the stop loss not below, just like that, but we can, because it's so, look at that, this low and this low are so close together, we can put it below this. Okay, so like that. Okay, great. And you can see that in the next week price triggered the trade. Okay, I mean the order. Okay, so this is the first example. Okay, and price goes in, I mean goes up, and we hit 1 to 1.5 risk reward ratio. Nice trade. Okay, that's it. Here would be a take profit for sure. Okay, but let's move on. Okay, let's move on. Okay, here we have a 36 rejection of the 36. It's a flip. Okay, these are not ideal examples, guys, but just telling you. Okay, so here's a nice entry. So a nice higher high, higher close, nice weak rejecting 36 going up, and this could be a potential entry. So we put a buy order above, stop loss below there. Okay, and we look for, and we aim for the take profits to up these highs. Okay, if we would look like that, okay, like that, okay, like that, this could be, of course this is a two bearish candles, so this would be, in terms of ratio, this would be like, I would not go, this is not like 60-40 for the bulls, this is like 50-50, or okay, it's not ideal. Okay, but the room would be a huge, so the risk reward would be huge, like 1 to 4, 1 to 5, powerful. Okay, but you can see in this case, let me just put it that for you like that. Okay, you can see in that case price would not be like triggered because the higher high of the previous candle was not broken. So okay, so this is our protection, guys. This is why we're entering like that. It's worst risk reward, yes, but we're many times we're protected because of that. Okay, so if we would enter with the market order right here, we would be stopped out within 2 weeks. Okay, so make sure, and I'm leaving that up to you, whether you enter with the market order, with a buy stop order, or the retracement. Okay, when you're entering the market order, make sure that the trade is really powerful. Okay, if you're in a doubt, if you're not sure, make a buy stop or sell stop order, so putting it above or below the entry candle. So this is your extra filter, very important. This will save you many times. Okay, do not be too greedy. I see many traders entering the market order or retracement order, okay, for the sake of increasing risk reward. This works many times and it's very powerful, especially retracement entry, because your risk reward is like extreme. Okay, but sometimes you have to ask yourself whether I'm doing it that for real, because it's really like that, because price action is really telling me that there's a potential for retracement, or it is my greed to maximize the profits. Okay, so you have to ask yourself this kind of a question. So you have to be very honest. We all have to be very honest when it comes to determining the way of entries, the type of entry, whether it's a buy stop order, market order, or retracement order. We have to be really really honest. Okay, what's the best? Not for my personal desire, okay, but for actual market price action. What is actual market price action telling me, explaining me, okay, wanting me to do, okay? So in this case, we would be protected against the loser just by using buy stop order. Let's move on next. Okay, next. We have a nice low here, exhaustion wave. We have a higher close. I mean a little bit, yes, but it's a 3-bar reversal. This is a powerful. You can see here's a 3-bar reversal. Somehow 3-bar reversal. It's not. I mean, it's not ideal. This is not an ideal example, but I like to see how. I wanted to show you that many times we'll be protected out of this. Here's a 3-bar reversal. Okay. So in this case, okay, the close is so nearby the high, it doesn't even matter whether we enter with the market or with the buy stop. It doesn't really matter. We know that price will. You rarely see that price will just explodes from the certain point. It will always retrace a little bit. So in this case, this is a little bit more advanced. In this case, and yeah, it's a little more advanced, but you have to be aware that price always, even if the candle is perfect like this in the perfect location, price will always go a little bit like against and then explode. Okay, so in this case, because the market order and the buy stop order are so close together, I know that price will go like that. No matter, like, look, yes, it might miss. Okay, it might miss. Okay, but if we look in a that way, okay, we know that price will like retrace like for the next 50 pips. Okay, it will not like explode just straight up. Okay, without retracing for the few pips. In this case, to maximize the risk-reward ratio, we can enter with a slight retracement entry, not like 50% or more, because there's a low chance that price will go that, I mean, lower chance that price will retrace so much and then explode still. Many times it does. But we can go with a slight retracement entry, okay? Okay, so here's the market order, okay? Or the buy stop order, okay, but we can go with slight retracement entry because we're aware that price is retracing a little bit. Okay, so here's an entry. The stop loss for an aggressive ones could be below this candle low, for the conservative even below this low, and this trade would smoothly run into our profits. Okay, so the first take profit could be right here. It's very simple. It's not like super complicated putting the take profit and stuff. It's very common sense, right, guys? And the next take profits would be around this area or even up here. Okay, and this trade would be a very huge profit for us. Okay. Next, look at that. We move on. We have a candle which is pretty strong, to be honest, breaking 36 anyway. Rejection and then lower close, 3-bar once again. Okay, look, if you look at that, if we put a sell stop below this candle, we would not get triggered into that trade, and this would be again a protection from a loser. Stop loss below this, above this candle, or above here. Okay, if the stop loss from the entry in the previous candle is like huge, put it above the current candle. But if it's like very narrow, like here or here, put it below this one. Okay, I mean, this is just a recommendation. They're not okay, so it's all about probabilities. Okay, but if we would enter with an entry market order here or even retracement, we would get stopped out. Okay, so this is a good approach. Okay, also right here we have a bearish candle pattern. If you would put a sell stop below this one, we would probably not get triggered. Maybe, I mean, but This is why I do not put it like 1 pip up below swing low, but always a little lower. You can see it's always a little bit higher like that. It's not like just 1 pip, okay? So this is a good way to enter. So you always look, if you decide, okay, I will trade just with we could call this a breakout entry, okay, breakout, because we wait for the break of the previous candle. Okay, anyway, if you would say, okay, I'm just going to enter with a breakout entry, you might miss a huge risk reward profit for some retracement, like in this candle, okay, just for the sake of being so limited. So you have to be flexible. I encourage weekly traders to be flexible, to be dynamic, to treat each trade, to each setup as a case-to-case setup. Okay, so like it's not like slamming many trades, but it's like individual case. Each trade is very individual, so you can treat it. You have time. We check charts once per week, so we have time to debate about it. We can discuss it. Okay, so for that reason, I encourage you to be open to that, to really be open-minded, and you'll see when you will be very attuned to what you think and feel it's right, okay? And when you will see a result, you'll be very satisfied. You'll have a feeling that it's your stuff. This is one of the aspects I've not talked about a lot, but you will really feel it's you who is trading. It's you're really the decision maker, and you will like that, okay? But if you simply follow the strategy blindly, just do that, you will, there's a huge tendency, and this is, gosh, I've never been talking about it, but it's so important. When you follow the strategy blindly, when somebody tells you, okay, do that, what's the problem? Why you're not following the strategy even that it's working? I've realized that pretty late in my trading career, is that people need and have a desire to have their own way of making their decision-making process. They like to see, they like to feel that they are the one, that the strategy is there. Okay, that the entries I do are mine. Okay, so this is important, guys. This is important. Okay, very important. This is why I encourage you everybody to explore with the weekly time frame. Do your own stuff. Okay, use this course and material as a great foundation, but experiment, do testing on your own. I'll help you. Reach me. Madam, what about that? What about that? What about volume? What about that? What about that? Okay, what about this indicator? Okay, experiment. Find your own way. Okay, find your own way. Okay, but always stick to the basics. Always come back to the basics. Use the basics as a foundation for your trading strategy. Okay, so that's it, guys. That's it. I hope you made some notes. If not, watch it once again, guys, and let's move on the next video. Alright, guys, so in this video we'll talk about money management techniques. So there are basically 3 money management techniques which I found the most useful and the most simple, to be honest with you. So I'm a fan of a simplicity, and you are as well. Okay, so you want the things that they're simple and effective. Okay, but there are different ways how you can define your money management, or how you can define and use risk per trade management, if you want to call it like that. Okay, so basically I'll present you right now the 3 basic, or I cannot say basic, but 3 different ways how you will actually define your risk per trade. Okay, so it has to do with 2 things. The first thing is the quality of the setup. So the first thing we have to consider when we're defining our money management is the quality of the setup. So how to define the quality of the setup, we'll talk in the future videos. But the quality of the setup is really, really important. Okay, so for example, if you're a trader who like really the best to trade the best quality setups, okay, you will probably adjust your risk rate a little bit differently if you compared to if you would trade just all the high quality and average and poor setups, etc. So the frequency, if you're trading only high quality setups, for example, your frequency of trades will be much lower than compared to a trader who will be trading the average trades as well. Okay, so for that reason we have to also adjust our risk. Okay, so right now let's just get into that. Okay, so on the left chart you can see the quality of the setup, and on the right side of this table you can see a money management technique. Okay, so let's start on the first one. So the first one is high quality setups and average setups. Okay, once again, what are these, how to define the quality of the setup, we'll talk in the future videos, but right now just I mean, it's very logical. The high quality setup means that there's a lot of indications for one direction. Okay, so there's a lot of signs of bullishness, or there's a lot of signs of bearishness. Okay, it's not complicated, it's simple. Okay, but the average setups is where there is not so signs. There's not many signs, or there's less signs into one direction, or there's a conflict. Okay, but in trading weekly time frame, patience is our it's our huge strength. Okay, as long as you'll think that the patient, that you're impatient, that patient is your weak point, you will be impatient. But if you say, look, patience is my core, patience is gives me an ability to really end the year in a profit. Okay, it doesn't have to be like 50-100% profit. If it is 10% profit by the end of the year, trading 50 minutes per week, that's 13 hours per year, that's it. It's much more than most of the capital managements, or most of the funds, most of the banks can offer you. Okay, but how to achieve that, let's say 10% profit in 1 year, you have to think how you're going to get there. So this is what we're talking right now. So the first option is that you prefer trading high quality and average setups. That means your frequency will be a little higher. Okay, for that excuse me guys, for that type of trading, I prefer and I recommend to trade with a fixed percentage per trade. Okay, it can be 1% or any other size, but it is fixed. So you basically adjust the lot size compared to your stop loss, but it's always fixed. Okay, what's the beauty of this money management, excuse me, is it gives you predictability. Okay, if I'm going to lose 5 trades in a row, I'm going to lose 5%. Okay, that gives you a sense of security, sense of stability. Okay, it gives you control. Okay, and also on the upside, if my average risk reward ratio is 1 to 2, okay, that means if I win the next 5 trades, I'll make 10%. Okay, so it's very predictable, and I recommend to, if you're going to choose this option, I recommend you to start with 1% maximum. Okay, slowly after the first year or after the half a year, when you'll see that you're going well, that it's going well, you might increase to 1.5 per trade. Okay, but you don't want to start with a too huge position like 2 or 3% per trade, because if you lose like 3 or 4 trades in a row with 2% risk, this is like 6-8% loss. Okay, and there might not be set up for 3 weeks, for 4 weeks, and you will feel upset. Okay, so try to keep your drawdown below 5% or below 10% ideally. Okay, so this is the first option. The second option is to trade only high quality setups. Okay, that means there's a lot of signs when you get a setup, there's a lot of signs of a bearishness. The bears are just dominating, or the bulls are just dominating. There's a trend line, the structure, the context, the candle patterns, everything's pointing just into the one direction. This is the high quality setup. Okay, it's like a sniper approach. Okay, so you really aim and you really look and search for the high quality setups only. Okay, and for that reason you can risk more, because your frequency is lower, but the chance of winning a trade is higher because you're trading the high quality setup. So for that reason you can risk more. It can be like from 2 to 3%. Okay, but you can start with 1 to 2%. Okay, just if you're just starting out, from 1 to 2%, it depends. You'll have to figure that out, or let us get into one-on-one. Okay, but for the beginning, try to risk if you're choosing the second approach, try to risk from 1 to 2%, or 1.5 to 2.5. Okay, 3%, risking 3% is really look, if you go into 3 trades with 3% and you lose in 3 at the same time, it's a 9% loss. Okay, of course, if you're trading 1 to 2, 1 to 3 risk reward, you can make a lot. You can make like 15, 20%. Okay, but you have to be cautious about risk management. Okay, so we as a profitable traders, guys, a profitable trader is really focusing on the risk management. He always have to think, okay, how much I'm willing to lose, how much can I lose if I do that, okay? Because the money, the results, the profits are just the result, are the consequence of you managing stuff well, okay? And we're naturally oriented to the profits. We all want profits, right? But nobody wants to deal with the losses. Nobody wants to deal with the risk management. Okay, so this is why we put so much focus on the risk management. Okay, why? Because risk management influence and impact our emotional well-being. And in order for us to be a confident, a bold, a really good trader, we need to be emotionally stable. Okay, so you have to ask yourself, how much I'm willing to lose? Can I sleep with 10% drawdown? Can I face that? If I, for example, lose 10% in a period of 2-3 weeks, for example, that 3 weekly setups hit a stop loss, will I be still okay? What's the limit? Okay, for example, for me, I like to not go above 7% maximum loss. Okay, 5 I can easily handle. I feel good about it. Okay. So but for you it might be, for example, you can easily deal with 15%. It comes up to what's your approach, okay? What you're focused on, how tolerant you are, okay? So this comes down and back to self-awareness, okay? So once again, the second option is high quality setups only with the dynamic risk per trade. So if the setup is really high quality, really like top notch, you risk a little bit more. Okay, if it is very good but it's not like the top of the top, you risk a little bit less, so from 2 to 3 or from 1 to 2%. You have to define that. Okay, so this is the second option. The third option is high quality and average setups, but you risk adjustable. You adjust risk on a setup to setup basis, on trade to trade basis. Okay, this is a little bit more advanced way of money management. Okay, it offers you, in many cases, it offers you a great it's very good for how to say, based on the quality of the setup, you can really manage your risk through the year with this method. Okay, let me explain even further. Okay, so if you risk on an average setup much less, look, it's always 50-50, but statistically there's a higher chance that this setup will be a loser because it's not really the high quality. Okay, so by risking only 0.5% on that one, and let's say 2% on a high quality setup, you do not lose. I mean, you lose a little bit and you can gain a lot. Okay, so I know you understand it. I just cannot find the words for that right now. But it's a very dynamic and flexible way of money management and risk management. Okay, the downside of this way of money management is that sometimes the average setups are very profitable, and sometimes even the high quality setups are the losers. Okay, so then you start, there's a tendency that you start asking, if this happens, you start asking yourself, so why am I trading like that if it ended up completely the opposite? Okay, so you'll probably face this kind of a situation. Okay, at least I was. Okay, so that's it, guys. I hope you understand the differences between these three. Okay, I would suggest, if you're just starting out, I would suggest to pick the first two. Okay, the first two, the high quality and average setups, or the high quality setups only. Okay. Another recommendation is, because you are starting, the patience will be probably tested over and over again. Okay, once again, it's very important that you repeat on a daily basis, I'm really patient. I really know how to wait 2 weeks, 3 weeks, 4 weeks for a perfect setup. I know how to do that. You have to believe that. Okay, and then you will act according to it. And in the circle, inside of the group, you'll get a lot of support about that. And if you're having troubles with being patient, and if you're feeling down, look, there was no setups for 2, 3, 4 weeks or even more. What's that? Okay, it's part of the process. Okay, enjoy the free time. Okay, but still, the high quality setups cannot appear for a month or two. Okay, so it's very much like an investing trading style. Okay, so you're really like a sniper. Okay, so if patience is really already your strength, the high quality setup is a good option. But because you want to get a feel, a sense, a touch of a weekly time frame trading, I would recommend to make a little bit higher frequency weekly time frame trading. Even if you're not profitable at first, don't worry about it. But just sensing how it is feeling to be in a weekly trade. Okay, so for example, if you don't, one of the common mistakes when traders start trading on a weekly time frame is that they are afraid of entering the first trade. Okay, don't be, look, it doesn't matter. You're spending 13 hours per year trading that. Okay, of course, yes, because you will study the course and you'll have to find some of the setups to practice. Of course, you'll spend a little bit more, but in the first month, okay, then when you will just trade and just participate on the weekly sessions, that will be it. Do not worry about the end result. Do not get stuck into it. Okay, focus on your life, focus on your business, focus on your family. Do what you love. Do what you love. The detachment which weekly time frame trading is providing you is an enormous benefit. This is our strength. This is our strength. So do not get worried. Okay, even if there is no 2-3 months of setup. Okay, how much I'm going to make? No, it's a long-term investment, guys. Okay, it's a long-term investment. By trading weekly, you detach from the collective masses of fear, of anxiety, of expecting the results on a daily basis. You're out of it. You're out of it. You focus on different things. You've bought a freedom when you join to a weekly trader program by trading weekly time frame. Okay, it's a different perspective, and I will pump that into your mind over and over again because it is so important. Because it is so important. Okay, you always have to remind yourself, okay, how was I feeling when I was trading on a 15-minute, 5-minute time frame, 1-hour time frame? How was I feeling? Was I making actual results trading 1-hourly time frame? Oh no. Okay, so now it makes sense. Okay, so why would I spend whole week 7, 8, 10 hours per week trading 1-hourly time frame if I was not making any results for 3-4 years? Why would I do that? Okay, I'm smart. Great, I've moved to a weekly time frame to maximize the efficiency of my time. Okay, and I do not worry about the profits. Profits will come. Okay, you have to think it in that way. So the money management technique is one of the pathways, one of the steps which will get you to that profits. Okay, so that's it, guys. Now really just let this practice. Think and consider in these days, okay, or in this week, which technique you want to start with. Okay, it is important that you define which technique you want to start with. Okay, and you can let us know. You can keep it for yourself anyway. Please consider that. Please think about it. Okay, do you really want a sniper approach, or you want to just deep and try the weekly time frame and have a control with the fixed risk per trade? Okay, or you really want to be a sniper and have a big wins? Okay, so it's really up to you guys. I leave that to you, but if you need any if you need any help, let me know and I'll do my best to help you. So let's move on the next video. Alright guys, so in this video we will go through one very powerful setup, just recent setup. So I really like that it's a recent setup, because some traders, if they are watching like setups from like few years back, they think they were happening just back in the years. But if there's a one setup which happened just recently, I mean, of course it depends when you're watching this video, but you are getting more confident. Okay, so today, you know, we have as a weekly traders, we have a breakout setup, so we have a rejection or reversal counter trend setup, so we have a trend setup. So today we will go through a New Zealand dollar on a weekly time frame as a reversal or counter trend setup. Okay, so we will go really like step by step, and I try to look, if I would have to record a course by my own terms, I would just blast you with the samples. Okay, just blast you with the successful trades and unsuccessful trades, so you would understand what to look for. Okay, but of course, because the mindset is really important, and the foundations, we also have to cover that in depth. Okay, so we're on a New Zealand dollar on a weekly time frame, and we are actually in a downtrend. We've got a lower low, lower high. Here was a nice support. Okay, nice support, which price hold, some consolidation, retest of these lows, and then another push to the downside. Okay, so this is the continuation of the trend. But right now it looks like price is breaking through the 36. Here's some sweet spots going on. Okay, price is finding a resistance here. So what does that mean? That bears are getting more confident and bulls are getting less confident. Okay, but the entry actually already occurred quite a few months ago, and let's take a look on this example. So if we zoom out a little bit, we can clearly see that we can mark some of the structures going on right here, and this is this one. And here's another one. Okay, here's another zone. Okay, so you can see this is a pretty low from 2015, a pretty like a strong low. Let's zoom out even further. Okay, let's take a look. Okay, here were some structures in the 2005 2006, but definitely if we look for the whole chart for the last 10 years, we can see that this is a major area. So price action, even though it was in a downtrend, okay, it hit a major support. Okay, so this is what we call the first step, is the location. So firstly, we identify the structures, the trend lines, the moving averages. Okay, so where are the nearest structures, the nearest trend lines, and the nearest EMAs which are acting as a powerful support or resistance area? This is the first step. This is the location. Okay, and about the location and about the all these three steps we're going to talk right now, we also talk in the 3 combo course a lot. Okay, and they're really the core, they're really the foundation. So to everybody who joined to weekly trader program, there will be, I don't know whether it will be a huge discount or you'll get it actually for free access to the 3 combo strategy, because it's really the foundation. I really cannot pass any trader through any advanced course like this one without mastering the 3 combo strategy, really the foundations of the price action swing trading. So firstly, we've identified the weekly structures on a weekly time frame, okay? And you have to be aware that when the price was here, like in a May, we already have marked this zone for the September, okay? So you have, on a weekly time frame, you have really a time to prepare your charts, okay? So let's just delete that, guys, and that, okay? So price action hit a major structure, and let me just delete that so we'll not be confused. So here's a zone, okay, definitely a zone. And once price, but it's also important how price reach this zone right here, okay? And you can see it's a strong push, retracement, and the exhaustion wave. What is an exhaustion wave? It's simply price action is slowing down. That means there's a transition between buyers and sellers. So in this case, from sellers to buyers, okay? And then there's a second push of a sellers and then transition to a buyers and getting more confident. Why? Because of the structure, okay? But we have to look at these both two aspects, because price might break through that structure easily. So we have to combine both of these elements together, okay? Sometimes you'll see some weakening and exhaustion and slowing down and transition without any structure. And this is unpredictable. And sometimes you'll see price action just blow through the structure like this one from 2015. Okay, so if we want to have certainty, if we want to have confidence, we need both. We need a structure and we need a slowing context. Okay, and there's also a divergence on a lower time frame. If you would put a stochastic or anything, you would see there's a divergence. Okay, in the divergence we talk really a lot in the 3 combo course, so I really suggest you going through that course as well. Okay, they're really like both very combined. These two courses are very combining together. Okay, and so we have a strong structure which is right here. Okay, we have a slowing context. What's context? Context basically, once again, is the recent price action. It's like 3, 5, 6, 7 candles in the past, so we understand what's happening recently. And then we look for the entry candle pattern. Which entry candle pattern is so dominating, so obvious, it's like calling us for entry. So once we have these 3 elements, we enter a trade, and the entry candle pattern is this one. Okay, price penetrated to this structure right here and rejected. So that means sellers wanted to go through, but buyers, because of this strong structure from 2015, they realize, okay, damn, this is a very strong area. Let's load our accounts on a bullish side on the New Zealand dollar, okay? And so many traders, banks, institutions bought here, okay? Resulting in a huge wick penetrating through this area. This is a very good sign. We have close and open and then no other candle below this level. So this is our entry candle pattern. So if we would have to go from percentages, okay, if we would go like that, okay, like that, okay, like that, okay, being aware that, okay, here's a strong structure from 2015, okay, we have a good context, we have a nice dominating candle pattern. How much you would say that bulls are in control versus the bears? What's the ratio? What would you say? You can write it down, you can just say it in your mind, okay? Is that 50-50? Is that 60-40 for the bulls? Is that 70-30 for the bulls? Is that 80-20 for the bulls? Okay, what is it for your taste? Okay, I personally would say it's like 72-75 for the bulls and the opposite for the bears. Okay, this is my numbers. Okay, and you can compare to your own. It can be completely different, it can be very similar. Okay, but through the time you will understand. So then I asked myself, okay, so how much, and also then we've compared these three elements, then we also go for the take profits. Okay, what's the risk reward? Okay, 1 to 1 to the first structure, to the next one it's 1 to 4 actually. Okay, so how much am I willing to risk 2% for this setup? The answer is yes. I do. Okay, if you've chosen, it depends where this video in the course will be, but if you've decided for 1% fixed percent, then it's 1%. Okay, anyway, but if you're in a flexible group, you can ask yourself, okay, am I willing to risk 2%, and I'm willing to wait like few months, like 2-3 months, for price to reach these highs? Okay, yes, that's it. That's the trade. The buy stop is here. Okay, above a little bit higher. Let's zoom in a little bit, guys. What's that? Okay, buy stop above. You can also enter with the retracement because the highs and the close are so, okay, with a little bit of a, like, it's really up to you. I entered this one with a high breakout through. Okay, the stop loss below there. The take profits, take profit 1 is right here, take profit 2 is right here, a little bit lower. We never put take profits right on the structure, but a little bit before. Okay, so the first take profit has been easily hit, still though it looks like not a good thing at first because of this candle, but look at this candle, it break through. Okay, so we're simply waiting for price to reach that. Otherwise we can trail stop loss on a break even below this low, and we'll leave it as it is, or even below this candle low. Okay, sometimes it's recommended, and this is also, you should write it down, sometimes we also trail below a very strong, or above, it depends on the size, the side, below a very dominating candle pattern, because here if price exploded since here, that means there's a lot of bullish power. This is a strong area of support in this case, so we put it below these breakout candles. Okay, so that's it. But for example, if you would say, okay, I'm willing to risk 2% on this one, no, then try to reduce the risk. And if you're still not willing to enter with 1%, for example, or even less, then ask yourself, is the time, it's like 3-4 months, 2-3-4 months too long for you? Okay, why is that? What's the catch? Okay, why you are impatient? Okay, but if the time and the risk per trade are not the issue, like you've got like 75, okay, good, it's a good sign. Okay, let's go 1% and 3 months, good. Okay, good commitment, I'm happy about this trade. I see an opportunity. Look, in each trade you have to see an opportunity. If you see it as a danger, if you see it as a escape, if you see it as a something, if you feel negative about when you're entering a trade, then you have to figure out why you're feeling that. It's very important, okay? Because you're entering for 2-3-4 months, you're committing yourself. You have to be in okay vibration when entering. Very important, okay? So if the setup is like 75%, good. But if you're not willing to enter, no matter what, you have to figure that out. Okay, write me down, email me, however, but just figure out why you're not willing to enter. Where's the fear? What's going on? Why are you afraid of that? Okay? What's the pressure behind? What's the belief? The limiting belief which is blocking you in that, okay? So consider these kind of things, okay? So this is an example of a high quality trade, okay? We've got a good structure, good. We've got a good context, good. We've got a good candle pattern, good. Entries, no questions. This is very clear, like very clear setup, okay? We've got a 70-75% quality of this trade, or confidence of the bulls. And you will see, guys, when you have a breakout candles, this is not a breakout, this is a rejection candle. But when you'll have a breakout candles, you will tend to be more confident because the breakout is already the confirmation of one direction going into that way. The rejection candles will be less sure or will show less confidence, even though it might be better set up than the breakout. Okay, just a little tip you try to be aware of. Okay, so that's it, guys, and let's move on the next. Alright guys, so in this video we'll go through a very powerful setup from the early 2017. So it's a New Zealand dollar on a weekly time frame, as you can see here right now. Okay, so we're pretty much into the chart, so like we're zooming in to the maximum level, and let me talk about that at first. So I've saw many traders and myself as well to be very like discouraged from entering a trade if I was zooming out too much. Okay, and this comes especially to a weekly time frame. Okay, so if you're like that, okay, there's no way you're going to enter any setup at all, okay, on any time frame, because you really do not see the details. Okay, so for that reason I encourage you to use the biggest, just for marking the biggest areas of areas of resistance and support, okay, and to see the whole price action on the bigger scale. But even this level of zoom in is not good for entries. Okay, it's good for the management, because when you're in a trade, for example, you're in a trade, it's in a profit, you don't want to be too much into it, because you'll have a bigger tendency to get it too quick out of it, like to cut the winner too early or do any kind of a micromanagement. Okay, so, and this comes with experience. You'll start noticing that the different level of zoom in of angle will produce a different psychological effect. Okay, so with this, okay, so this one and this one are purely for marking the biggest areas. Okay, this one is also to see the bigger context and to understand the price action, so the bigger context. But to zoom in even further, this is probably the best for having a good overlook of the current situation, okay, of the context, of the structure, of all the elements, and also the entry candle pattern. Okay, so but when you're entering, and this is also a good one for taking for setting a take profits and stop loss, but if you want really like what's going on, you should zoom to the maximum and see each candle, where's the wicks, what's the ratio between them, okay, where to put entries. Especially for the entries, use this one. Okay, use this one. Okay, because you'll have the most insight. Okay, so here's actually a very good entry, which is right here, and it's very simple. So we've got a very nice resistance, we've got a EMA, so this is the location, we've got a context. Okay, price action is approaching it, price action test the structure, reject it, test for the second time, reject it, and create a bearish candle, breaking previous one, creating lower low, lower close, also breaking this trend line. So it's a clear breakout and rejection candle at the same time. So this can be both. So this is a rejection and breakout. These are powerful. It is somehow big compared to the whole price action. Okay, so for example, if we would put the sell stop below, so this is an entry candle. Okay, guys, okay, this is an entry candle. Sell stop below there. So the stop was like 230 pips. The take profit is down there, 200, so it's 1 to 1.5 or even less. So this is not ideal. Okay, this is not ideal. Okay, but because we have a nice structure here, so the purpose of this video is to show you a good quality setup, but also a retracement way of entry. Okay, so when you have a rejection breakout candle, which is this one, so it rejects the resistance and it also breaks the previous candle and it breaks the whole trend line, or it's very dominating. It looks like a breakout. If you have a small candle or somehow a doji candle pattern, or even few of them, at around 50% of this candle, this is a good area to put your retracement entry. You'll see you'll get a much bigger risk reward with this. So you can see here's some week, here's the week, here's the week. Okay, so definitely there's this an area of support and resistance on a lower time frame. Okay, and you can see here, here, here. Okay, so some minor structure in here as well. Look at that if we go in a past. Okay, let's go even further. Here's some structure. Let's zoom out a little bit. So definitely in some area, minor structure area. Look at that here. Okay, so but this is not so important in the past. It's what's important is recently, the recent candles. Okay, the recent candles. Okay, don't go too far away. Okay, but it can be as a confirmation. But the recent candle, the candle, the first, the second, the third candle before entry candle pattern. Okay, the first, second, third candle pattern before entry candle pattern, or the previous context like this, serves you, tells you this whether there's a structure or not. Okay, but this last, this is true for the breakout candles. You need to have a breakout candle breaking the previous candle strongly. Okay, so in this case you can see price opened here for the next week. Okay, instead of entering sell stop, we could set a sell stop, the retracement, I call it the retracement entry. Okay, not at the peak of the structure, but a little bit earlier in between, like that. Okay, like that. Okay, you get the point. Okay, in between, or at the beginning, or in like somewhere here. Okay, so you can see price opened and then retrace, trigger the order, and then continue to the upside. Look, it took 2 weeks, or actually 3 weeks of price to really get to the where we wanted, but it's a much better risk reward. So the entry is here, the stop loss is here, the take profit is here, not right on the lows, but a little bit early. Okay, a little bit early. Okay, so we might, probably I would miss that. If I would put it here, we would miss that for sure. Or price would just, okay, but it would take 1, 2, 3, 4, 5, 6, 7 weeks, almost 2 months for price to hit the take profit. And this is when the patience is really tested. Okay, so this is the reason why we try to put the take profits a little bit earlier, not at the peak. Okay, yes, it would be a bigger risk reward, but it's not worth it to wait 2 months more for just like next 50 pips. Okay, so in this case, the stop loss is 150 pips, and the take profit is it's 300 or even more pips. It depends. Okay, so it's a more than 1 to 2 risk reward ratio, which is a very good. Okay, so this is when retracement entries get into a place. They're very powerful. I really love to use them, to be honest with you, because they provide a big risk reward ratio trades, especially if the candle is somehow smaller than this one. You can easily get like 1 to 3, 1 to 4, 1 to 5 risk reward ratio, and this is really the trades I'm passionate about. I really like high risk reward trades because when I win, like, imagine like risking 1% per trade. If you hit a 1 to 5 on a weekly time frame within a few months, you make like 5%. And look, then when you make a 5%, okay, you can really play around. You can really enter 5 weekly setups and not worry at all. Okay, or imagine entering with 2%. This would be 10% profit. Okay, so 10% making one trade. Okay, this is really like you need just 2 of them per year, or even 1, and it's enough. Okay, for you to feel good. Okay, and guys, once again, try to feel good with 5 or 7% per year. Okay? It's natural to make such a return. It's a good return. Why do you want to double your account each month? It's not a truth, okay? There are many algo traders and all that which are trading for 2-3 years with 3, 4, 5, 7% profit per month, okay? But these are the high risk and high involvement way of trading. You have to do that full time, okay? And with the Wealthy Trader program, okay, the Wealthy Trader program. So I encourage everybody, if I haven't mentioned yet, I encourage everybody who are trading weekly time frame trading to also experiment with the Wealthy Trader program, okay? If you're in, you're in. If you haven't joined the Wealthy Trader program, it's a really you check charts 2 times per week, really, and you can make 3, 4, 5% pretty easily. It's a little bit more high risk trading, but it is really a satisfaction of getting profits each month is very good. Okay, so if you're somehow impatient, if you are somehow want results and profits and want a really each month profit, then the Wealthy Trader program is a good way to go. But you'll have to spend a little bit more time on it. Okay, 2-3 times a month, a week. Okay. But to be honest with you, I checked it only once per week. Okay. Anyway, explore with the retracement ways of entries. Okay, find a breakout, find the setups like this one, and look at the structure of the previous candle and the previous few candles and this whole context. You'll see there's a structure, especially if you see a doji candle like this one. Okay, or the candle which is somehow consolidating, it's slowing down, the context is slowing down. Okay, this is very important. Then you need to have a breakout candle. So this is how we are entering a breakout entries on a weekly time frame. Okay, to maximize the risk reward ratio, because if we would enter down there, stop loss here, it would be the risk reward ratio wouldn't be in our favor. So for the breakout candles, you should write it down. For the breakout candle, we are most likely to enter with the retracement entries if we have some relevant structure in the past. If not, if the candle is okay, we enter with the breakout method or at the entry candle at the market order. Okay. Otherwise, if the candle is too big and there's no risk reward in our favor in front of us, we simply avoid it, or we risk a very small portion, or we risk a very big, bigger position than usual. Okay, but this is more risky way of trading. What do I mean by that? If you're having a risk reward of 1 to 1 or 1 to 2 and it's a big setup, you know it will last for, this was a quick one, but this could last for 3 months easily. Okay, there is a way of trading which, for a big setups, we were talking about, for the big setups you can risk more 3, 4, 5%. But if you're starting out for the first years, please do not experiment with this risk per trade. Okay, stick with 1%, maybe 2% later on, but 1% for you to test it out, so you can really have 10 shots and still having only 10 maximum percent of loss of your account, which is not devastating at all. Okay, when the lower you drop, the harder it is to get to the original place. So 10% should be, try to stay below 10%. Okay, this is my huge recommendation. Okay, because of the percentages, because of the math. Okay, so that's it, guys, and let's move on to the next video. Alright, guys, so in this video we will talk about actually about trailing the stop loss. Okay, so this is really important, probably more than you think, but the trailing method is basically defined. You will have to define it based on your preferences. Okay, so if we simply go through the examples of entries, we were talking about this in the previous videos about how to trade with a weekly time frame in a trend. Okay, so you have to you have to think about what do you want to accomplish with trading weekly time frame right now. Okay, when you're starting out, is that you want to build, probably from what I've experienced, that the traders who are new to weekly time frame, they try to build and get confidence when it comes to trading weekly time frame. Okay, and that means that you get your win ratio sufficient enough so that you, high enough so that you feel okay with it. Okay, but the win ratio is always connected to your risk to reward ratio. Okay, so for example, in time, of course, if you're entering here, you're putting stop loss below there, and if you're simply, let's say, put a Fibonacci take profit, okay, like that. Okay, let's say at 161, for example. Okay, this is here. Look at that, 161 extension. Okay, hold on, guys. Okay, so it takes like 30 weeks for that. Okay, so probably when you're starting out, you are not willing to, or you would, okay, to spend like 30 weeks, okay, more than half a year, okay, to get this trade. Okay, of course the risk reward ratio is powerful. Okay, is 1 to 2.5. Okay, so it's a good risk reward ratio, but are you willing to wait so long? Okay, so what I would recommend at first, this is just a recommendation. This is the best how you can trade. You simply define the take profit and you wait for price action to be hit and trail stop loss to it. Okay, but if you're not willing to wait for so long, I would suggest that you split the order into two parts. So one part is the original, as you would really trade like in the long term, and you put like a 10% of your full order for that. Okay, but the second portion of the trade, like 80-90% of the whole risk you want to trade, you trade it with a like 1 to 1.5 risk reward, or 1 to 1, or something like that, so that you will get profits like sooner. Okay, so but look, guys, this is more of a like defense way of trading. Okay, to you feel better. If you are not attached, if you're really detached from trading, if you're really trading based on curiosity and playfulness, you can go immediately into the full take profit positions. Okay, but if you're, for some reason, you're still very like afraid and doubting and all that kind of stuff, I would recommend you splitting a trade into two orders. One would be for you to be satisfied, and one would be for you to maximize the profits. Okay, but you have to understand that the second order, which will be much smaller, okay, the big take profit order would be much smaller, you would make less profit with that, so you do not feel discouraged about that. Okay, so anyway, this was just presenting you a way how you can get more satisfaction out of weekly time frame faster. Okay, anyway, let's move on trailing, guys. So from the observation and from the experience, I would like to give you some tips on trailing when it comes to trading weekly time frame. Okay, so if you're entering long, okay, let's say on this candle, Or let's say that you've entered on this candle, okay? Okay, on this candle, buy stop is above here, okay? Stop loss is below, let's say these lows, okay? Anyway, what I found, and your price gets triggers, what I found is that the best way is to trail based on a weekly time frame. Okay, sometimes it is tempting to go on a lower time frame, like 4 hourly, 1 hourly, daily, and trail based on these levels. Okay, this could get handy and appropriate if we are very near take profit, but otherwise sometimes we get, okay, for example, look at that, look at here, a rejection of this resistance. If we would go on a 4 hourly time frame, we would put stop loss somewhere below there and we would get stopped out, okay? But because of weekly time frame, we simply have to trust a weekly time frame. Weekly time frame, look at that, it just rides, then retracement, and then it continues. Look at that, and then continues, okay? So what I suggest is that if you put your take profit, if you enter based on a weekly time frame, put your take profits and stop loss and trail the stop loss according and based on a weekly time frame. This is the first recommendation. Other recommendation is that you trail only on a strong and solid candles in the direction you are trading. Okay, I'll repeat that. Trail your stop loss on a strong, bold candles only in the direction you trade. Okay, so if you buy, you trail only below bullish candles. Okay, and strong bullish candles. Okay, so here's an order: buy stop, stop loss. Okay, and the next candle you get, it's a very bullish, okay, strong breaking candle. Okay, so that means you trail your stop loss below this swing low. Okay, good. Then you have a bullish candle, but it's not a strong obvious candle, it's a rejection candle. What we need is a strong body. We do not trail based on this candle. Gosh, let me find out. Okay, we do not trail below this candle because it's not breaking candle, it's a pausing candle. We always trail below breaking obvious candles. Okay, so the next candle is a doji candle. We do not trail below this one. The next one is a bearish candle. We do not trail below this one. Okay, next, the bullish strong candle breaking. So that means there's an impulse like on the lower time frame. We trail below that. We trail below this candle or also below this one in this case. Okay, next candle, look at that, bearish candle. We do not trail below this candle. We do not trail below this candle. We would be stopped out. Okay, we leave it here. Next candle, a bullish candle, not so strong. Okay, still leaving the stop loss down there. Next, bullish candle but not strong. We leave that, or we might, because this is a strong one, we might put a stop loss here. Okay, next candle, bullish candle, strong one, we put below. Okay, by the end of the week, not at the beginning, by the end of the week we put the stop loss below this low. Then we have a small candles, and we are seeing already the exhaustions of the wave. Okay, and the price action starts to fall, and we would be stopped out in this area right here. Okay, or for some reason, if you were picking the price action fast enough, you could be trailing the stop loss to up here when you have a double bottom. Okay, so when you see a slowing down, anyway, this is more of an advance. Anyway, we would be stopped out in most cases right here. Okay, so you would achieve like 1 to 2 risk reward ratio in this case. Okay, a little less, okay. But if you wouldn't trail, or if you wouldn't trail too aggressively, you could be still running in that trade. Okay, so one of the options is to simply, if your stop loss is very nearby the EMA 36, if you're trend trading, we're talking about trailing on a trend, you could be trailing this below the EMA 36. Okay, okay, not like exactly on it, but below, a little bit more below on it. Okay, so you put it like that. Okay, okay, when you see this candle here, and when you see EMA right to here, okay, like that, you put your stop loss right here as it is. Okay, then price moves on. Okay, you move it like that. Okay, move on, you put it like that. Okay, and you simply ride the trend, and you simply do not care about anything else. Okay, okay, of course, you would say yes, but there's a very huge risk for me to lose, like I make like 600 pips profit, so wouldn't I secure that? There are ways to hedge that and to make more profits by hedging. Okay, but we will talk about that in the future. But these are two ways. Okay, these are two ways that you trail based on a strong candles in the same direction, or you trail by the EMAs in the trend trading. Okay, so that's it, guys, and see you in the next video. Alright guys, so in this video we will go through one high quality setup, but also I'm going to share with you actually the secret how to really squeeze the most profits out of trading weekly time frame. Okay, so this is really what makes you like this more regular profits, more satisfaction in trading weekly time frame. Okay, so let's just get started, guys. So we are on a cat Swiss weekly time frame. It's actually the spring 2018. There was a nice setup. The entry candle pattern was right here. You'll see sometimes, sometimes I start with the location, the context, the candle, but sometimes it's so obvious, like there's just a candle pattern on this resistance, onto EMA 200. It's so obvious, and we're looking for setups like that, for obvious setups. Okay, and there was a slowing down. Look at that, price tried to went through, rejected, and then create a bearish candle. Still though, it was not lower low, lower close. Yes, the close was lower than this one, of course, but it was not lower low. But still, there's a trend line, some breakouts happening. It's a solid bearish candle on the good location with the good context. So I would say like that, if we have to put it into the numbers, I'm having more difficulties doing that consciously than having a feeling of doing it subconsciously. So if you, I do that intuitively, like I feel it, I know it. Okay, rather than putting into a numbers, it's a rational thought process. So I have to rationalize this intuitive insight. I would say about 75 to 25, or 70-30, or 75-25. Okay, somewhere in between. Okay, more 75-25 for the bears. So I believe that in this case, bears are 75% in control versus the bulls. Okay, the good sign is also this lower high compared to this high. Okay, that means price is really trying to find some lower time frame downtrend movement. Okay, so the entry is in this case very logical, because here's the trend line. The breakout happened already a little bit, but not very much, and also this candle is pretty small compared to the whole this movement, which is 600 pips. So for that reason, I pick the breakout entry method. Okay, with the stop loss above, okay, stick with me guys, above this, not this high, but this high. Okay, perfect. So the stop loss is 160 pips. The take profit, which is here, not right on this, not there, but even a little bit higher, like that. Like, let me just put that number for you. Not here, here, here. I mean, here's the best because we have like multiple opens and close, but a little bit earlier. Try to always put a little bit before that, okay? And the 160, okay? So it's like 1 to 3 risk reward ratio, okay? It's 1 to 3, okay? If we put that box, okay, it's a little bit bigger, like that. It's 1. Let's see if our feeling is right. 2, okay, 2 and a little bit more than a half, 1 to 2.6, okay? So it's a decent risk reward, right? But understanding, okay, so this took like 3 months, okay? We could also experience that around 3 months for that, okay? Like 3 months, but it actually took much longer. It actually took like 32 weeks. Excuse me, I was talking about weeks, not months. 32 weeks, okay? So this is more than half a year, okay? Not ideal, but it happens, okay? But if you are not willing to split, which I don't recommend splitting orders into 2 parts or 3 parts, I really suggest entering with 1 full order and that's it, okay? Because as soon as you separate the trade into 2 or 3 orders, it's not like 1 to 2.6, but it's much less. The math is much less. So because, okay, you get my point, right? So I suggest that you trade, it's up to you, but I personally trade with 1 order on a weekly time frame, okay? Like always, okay? But what I do differently, which is really the secret to the maximizing the profits, is milking. It's like literally milking the markets in the opposite way of my entry, okay? So for that, you simply, when you enter a trade, okay, imagine that we have entered 1 lot. So 1 lot, it doesn't matter about percent, but just 1 lot sell, okay? Selling cat Swiss for 1 lot, okay? And the next thing, and because I see the take profit, it's pretty like far away, so it could take like months, in this case like half a month, I mark the high probability areas or the sweet spots or the structures, however, in the path to this take profit, okay? So there's a path, there's a space to this take profit. This will take time, this will take like emotional stamina, however, but on the path to this take profit, there's some areas where price might bounce, minor structures, we can call it like that, okay? And if we zoom a little bit out, okay, if we put it like that, okay, we can see, if this is our entry, the first area which popped into my mind is here, is this one. I'm looking more the recent price action, is here, okay? So for that reason, when the price is somehow near this area or at the beginning already, here, but I do it later, you can put the buy order, not right here, but a little bit earlier or somewhere in between, right on the structure. You put a buy order here. And this is new approach. We're not talking about it, but it's a very powerful one. You put a buy order without take profit or without stop loss. Okay? And the size of this buy order is smaller or equal to this size in terms of units. So it can be 1 lot, okay? It can be 1 lot going along or less, but never more, because if price continues to move down, you'll lose, okay? You'll start losing, okay? If you enter with an equal amount, like selling, so 1 lot, that means you are locking the profits. So that means if you make like $1,000 to here down so far, you will not make any more, whatever price does, you will not make or lose any more money. Okay? If you enter less, like half a lot going along, here's one lot short, that means even price if will fall down, you will still make profit, but less, because this trade will be a losing one. Okay? But if price goes up, okay, there's a chance that you make profit. So this is where experience get into the place afterwards. Okay, so one of the methods is, you should write it down, one of the methods is that you go the equal size, so one lot short, one lot long, and you scalp like whatever amount of pips you want, like 10, 15, 20, 30, 40, whatever amount, but don't be too big. Like, don't make a small portion of whole that movement you can scalp without stop loss. Okay, without stop loss. Okay, this is one way to approach it. This is what will give you a satisfaction, because price, based on a weekly structures, price for sure, if there's any point of a resistance, price will not just blast through it. It's very hardly you'll see price just ignoring. But even if you'll see a weekly price action just falling down, there's a huge probability, look, price just retraced in that week for quite a while. So it's basically scalping based on a weekly time frame. Okay, and this will give you these small little wins, okay, which are very like satisfying. Okay, this is one approach, and I really like this one. Okay, but another approach is that you enter with smaller position than selling. Let's say, and the stronger the structure is, the more you enter. Okay, if the structure like this one is very minor, this is minor structure, but the reaction was strong anyway. This was a minor structure. You enter with smaller position. Okay, like half a lot or even less, 1/3 of the lot. Okay, and you simply enter and you leave it. And you observe how price action is evolving. So you basically make the decision when you're going to close this buying order based on a candle pattern, based on a context. Okay? And when you see that price is losing a momentum to the upside, one thing is that you simply, let's say when you see this candle pattern, okay, there's some shorting, there might be an opportunity for price to fall down. When the price is here, you close the buy and you leave the sell open. So you basically make like 120 pips with half a lot, which is it's a lot. It's a decent, okay? Okay? While you can move stop loss on a break even. So that's it, guys. You've made a profit. Okay, well, you have a huge opportunity. Your main opportunity is still running. Yes, it's closer to your entry. Yes, you could be stopped out, but you've made a profit. That's it. Okay, so this is how you actually make like more money and have more opportunities on a weekly time frame than just entering just one setup and wait and set and forget. Okay, we don't do set and forget in a weekly time frame trading. Okay, whether you can scalp with a full position or smaller position if you don't feel okay. Okay. Or you can enter with a smaller position than the original entry and you wait for the price action to make some, to show signs that your original direction, which is selling in this case, is right, and then you close. Or you can trail, you were entering here, you trail the stop loss below this candle low and this candle low. Okay, so you are open. I'm just telling you the opportunities, and go, guys, take it and stick with it what it makes sense to you. Okay, I've learned already that if I tell you do that, you will not do it, because you will not blindly follow the strategy like day in, day out, because somebody says that to you. You want to make it for your own. You want it that it makes sense to you. Okay, so for that reason, I'm telling you what's profitable. You just have to take what you think is the right for your way of thinking, for your way of living. Okay, for me personally, I really like to, because I want to be like, I like these little gifts and candies, however you want to call it. I go full position opposite with scalping just 10, 15, 20, 30 pips. It depends on a pair. And that's it. It's a huge profit. It's quick profit within a few days. Okay, and when I come back in the next week, I am like 99.9% sure that it will hit this small position. Okay, you could also split. You could also make like if this is shorting one lot, this is buying half a lot. Let's say 20 pip take profit. This will be for sure. Okay, hit for sure. You bank that. Okay. And half a lot you trail. I mean, you leave it and wait and close it here or even here when you see the confirmations of the original direction. So you can also do the combination. This is actually very, very powerful, very satisfying. Okay? And that's it, guys. Okay? And when you close that, for example, you half a lot, 20 pips, great, perfect. 20 pips, I mean like 120 pips with a half a lot here, close, great. Okay, then it goes in a loss. Okay, yeah, you say you've trailed stop loss on a break even. Yes, okay, I'll be stopped out. Price did not hit your stop loss for the 25 pips and then continues to the downside. Of course, when price retrace, you think, okay, yeah, the next week I'm gonna hit the take profit, my original take profit, okay, and then it retrace. Somehow you are not you're not feeling okay, of course, and then you're stopped out because you've trailed it on the break even, or if not, you're still in the game, okay, and then it blows through. So this is why there's no right or wrong. If you go check similar situations in the past, it would be impossible to say, okay, you should trail it, you should not. But what I can tell you is that on a weekly areas like this one, price rejects for at least few pips. Why wouldn't you scalp that? You're protected. You have shorts here. If you enter on with one lot, if you're entering with 0.7 lot buying long, no matter how price crash down, you're still making profits. So why wouldn't you go opposite to your current direction on the very strong weekly areas and milk the market? Okay, it's a powerful way of trading on a weekly time frame. Okay, so you have to test in your own, and we will analyze these charts with a case-to-case basis. And I'm very happy, guys, to introduce you this kind of a trading. I hope you see value in it. I'm sure you see value in it. And I'm really excited for you to experiment with going into the opposite way of your current direction. Okay, so that's it, guys, and let's move on the next video. Alright, guys, so today we will talk about one of the simplest way how to trade with a weekly time frame, and it is really the basis for the 3-combo strategy and the daily trend rider way of entry. And basically what we can do on a weekly time frame is that in a trending market, we're simply waiting for the impulse leg breakout and the retracement back to our sweet spot. Okay, so today we'll just go through 2-3 examples of weekly 1-3 setups so that you will get a feeling. Okay, so right here we're on a euro dollar. There's actually many setups of these, but what I would like to emphasize is that what we need to have is a decent angle of the EMA 36 or EMA 50. Okay, and what I encourage you to have and to look for is at point 3 we need to see a smaller candles. Okay, we need to see a consolidation, and then we look for a breakout. Okay, so if we simply mark the lines, this is the beginning of a trend. Okay, then we have a consolidation. Okay, consolidation. Okay, like that. Okay, and then we have a breakout of another of these this consolidation of this trend line with a new impulse leg, okay? And if you remember from the 3 combo course, it is important that this impulse leg is breaking the previous structure for around 30 to 50%. So the 50% has to be above the breakout, okay? And afterwards, price smoothly retraced back to this structure area, which we can mark like that, okay? Like that, okay? And you can see how price reacts to it like very smoothly, okay? Like it touches, retrace, touches, retrace, touches, retrace. And what we're looking for in trading weekly time frame is this box, okay? Sort of a box. Let me just delete the structure for you, okay? We don't have any EMA in this example, okay? The 36 is not a guide. We also do not have a trend line here, so it's just a structure. And in trading a weekly time frame, especially when the breakout is so nice, we don't have like 3 elements in one. So it's the best, but many times we'll not get this. So what we have to inspect and take a look at is more of a price action, of a recent price action, okay? So here we have a box. I really like this kind of a boxes because that means the price action, the traders really slow down. Okay, slow down. The price action become moving sideways on a 4-hourly time frame, maybe daily. Okay, and afterwards we're getting a slow candles. Look at this candle, slow candle, which is showing a signs of a bullishness. This body is stronger than this one. Okay, and it's breaking above. Okay, but not the highs. Okay, so for aggressive traders, this could be an entry. Okay, but if you want more confirmation, the second entry would be a very appropriate. Okay, so let me just delete this box. Okay, so you can see price opened here on this candle, opened. Okay, went low, but buyers were so strong, pushed to the upside, created higher close, and the entry. We have 3 types of entries, but when we're getting a breakout, I like to enter with a market order or a little retracement order. Okay, so I do not want to put buy stop above this candle because we've already got a breakout. So this candle was already a confirmation for bullishness. Okay, so entering with a market order or slight retracement, or even deeper, however you want. Okay, is the way to go. Why? To maximize the risk-reward ratio. Okay, so but what's important, what I encourage you is to look at the context where the price is slowing down. Okay, so you need to look at the structure and you need to look at the price action, how price action is behaving. You need to see rejection, slowing down, and then finally breakthrough for trading weekly 1 to 3s. Okay, one of the methods is also when you see a consolidation like this. Okay, you see a consolidation like this. Here's the high, low, low. Okay, is simply that you put a buy stop order above these highs. Okay, not just 1 pip, but like 10, 15, 20 pips. Okay, depends on a pair. You put a buy stop and stop loss below these lows, and that's it, and you leave it as it is. Okay, so these are different ways of entries. Okay, and about stop loss, if you see the candles are moving greatly, like look at that, this low was lower, this was high, I mean this started here, this low was higher, there's a great increase and the predictability in this movement. So you could put, if you're entering with this candle, you can enter with a stop loss below this low. Okay, below this low or below this low or below this low, however aggressive you want to be. Okay, so this is the simplest way to trade weekly time frame, but these setups are not very often. They do not occur very often. Okay, for that reason, when we trade weekly time frame, we do not trade just one setup, but we simply trade the most understandable, the most reasonable, the most predictable price action. Okay, so in this video, we've gone through one of the most common and simplest way to trade weekly time frames. Basically 1 to 3 bouncing out of the structure with the small candles and getting some acceleration and entering on that. Okay, so this is one of the setups in your arsenal. Okay, let's move on. Price continues to move on. Here's a high, okay, and then price retraces. We also get a trend line here. Also have a trend line, and we also can extend this previous structure to here. So we have two elements together. Okay, so when price is around right here, okay, right here, we already drew on these structures, the trend line and the structure. Okay, and we simply, okay, see, okay, then price reached it, rejected, reached it second time, it created a pin bar. Okay. In this case, guys, I would not recommend entering immediately on a pin bar because price could easily fall down. Okay, but what we can do, if we're lucky enough, is that we wait for another candle which is not too big. Okay, so this candle is pretty strong, no wicks, very bold, one direction. Okay, breaking this trend line, okay, this candle breaks for around 50% this trend line, so this is a powerful entry. Okay, and this is our entry, guys. So we can simply put a buy stop above that, or we can enter with market order or later retracement. Okay, with a stop loss below this candle or below this candle low. Okay, and then we simply but if, for example, guys, if this candle would be up to here, we wouldn't enter that. It would be too big, or I mean, it depends on your style of trading, but I like really small weekly candles, so the risk reward is really beautiful. Okay, so you can see price goes nicely with the risk reward to 1 to 1.5, or if the stop loss is below there, it's 1 to 3.5, a strong risk reward. Okay, and then price falls down. Okay, so but it's actually a quick trade. Look, in this case, you could be running these trades, okay, to up here. Okay, so you can then, if you catch a weekly trend, if you catch 2-3 trends per year with that kind of a setups, that's it, guys. Okay, that's it. Okay, and in the weekly analysis videos, I'll help you to catch these trends. Okay, so that's it, guys. I hope you enjoyed this analysis. I mean, not analysis, but this video. Do not get frustrated, guys, if you will not see these weekly trends immediately. Okay, they need time to evolve, they need time to happen, and this is just one of the trades, one of the setups which we are trading to get into the weekly setups. So I hope you enjoyed, and let's move on to the next video.